because they know that the hex community will turn up to read an article that's published about them, regardless of the legitimacy of the outlet or not. So I would say that it's smaller outlets that typically will publish things, and the larger ones that are open to publishing things about hex, but only if those things are negative.
Interesting. Well, I really appreciate your analysis on everything. And and I enjoyed your talks.
Thank you. Thank you, Maddie. Thank you, everyone.
Thanks for participating again this year. And we'll do a music transition before we bring up the next crew. Thanks.
Bye.
That's a hex flex. Making money, yeah, we going by the excess. Yeah, hex, all we know about is excess. Turn a Fiat on ramp to an expressway. That's a hex flex. Hey, that's a hex flex. Making money, yeah, we going by the excess. Yeah, hex, all we know about is excess. Turn a Fiat on ramp to an expressway. That's a hex flex. Hey, yeah, we up next. Shut up with that scam mess, cause we up in hex. It showed a lot of disrespect, now they can cut the check. They had a lot to say, well now they can't say nothing else. They had some gains, things changed, now it's nothing left. Hey, money went into some means, ended up and left. Hex is up and to the right, they up and to the left. And looking up and down, everything around wreck. Should've dropped 100 when you found hex.
Hey guys.
Hey, what's up?
Hey, Maddie. Maddie's live.
Let's go.
Oh, hey, there you guys are. Oh, I got my hater shield today.
There you go.
It's a nice shield.
I don't know.
I paid a good amount of hex for that.
Your audio sounds kind of far away. I don't know if it's just me.
One moment.
But yeah, I'm excited to have you guys up as a panel together. You guys are going to take it away for the next hour, speaking on all topics hex, and appreciate you all coming up here.
Yeah, thanks, man. Sounds better.
Thanks for having us,
Awesome,
man.
perfect. Yeah.
Yeah, I don't know how we can follow the polyamorous discussion, you know. I mean, it's really important to me that all of you are satisfied. I just want to say.
You always do. You know.
Just being you never have to worry about that, crispy man.
Just being on the same panel as the guy that invented the new estimated share rate is enough for me to be satisfied.
Well, I didn't invent the math. I just.
What else did you do? You figured out how to do liquidity webs.
Yeah, but there's other people doing that too. There were. Yeah.
So you are also one of them, Mr. Crispy Man. You are also one of those
I'll
people.
take credit for doing some of it. So, well, guys, welcome. Glad to see everybody.
Likewise.
Glad to be here.
I'm glad that everybody's tuning in. I did try to stream this off to my channel, but it wouldn't go. Said it was too many streamers. For whatever reason, we hit a limit. So.
Oh wow! Yeah, I can't do it either.
Yeah, so we're here, but we took the opportunity to kind of sit down and talk before this. I think we're ready to go. Start hitting some stuff.
This will probably be the most bullish hex panel of the entire conference. I'm safe to say.
Let's
probably be the most bullish. So
definitely up and to the right.
100%. Like there's only one other thing that can go more parabolic, and that's the share rate, because it's got a longer lifespan than any of us. But we'll go as far as we can.
That might be true. 15-year cycles, baby. Right, that's hex. 15-year cycles. You know, everybody else plans for these little puny 4-year cycles. These little pumps for ants. We're planning for 15 years, multiple 15 years.
I wonder, like, what percentage of the people watching right now are old hex users, and how many of them are brand new, do you think?
I'd say 70 30.
70-30.
Yep, 70 is new, 30 old.
Yeah.
Yeah, it depends how you define old or new.
Yeah.
Let's say
pre-sacrifice.
Well, you know, hey, listen, that's probably a good point. I'm with you there, Ray. Yeah, 70-30 is close enough, 80-20, something like that. We couldn't know. But you know, the thing about all this, though, is product market fit is to be stake in hex in a ladder. And we can see that the shift has gone from long-term, mid to long-term stakes to short stakes. Now, some of that's driven by the fact that we are in a cycle, and everybody's anticipating this upcycle. But it doesn't explain why we're not getting commitments out 15 years the way I would expect them to be, which leads to probably a much fewer number of T-shares in 15 years, which creates this awesome opportunity to be in hex stakes. I know people hear me talking about it all the time, but you know, if the continued rate was to if this was to continue the way it is, we'll only have maybe 500 to 700,000 t-shirts, right, in 15 years. And right now we're about 9 million.
Yeah, wow, that's what percentage of decline is that? That's hardly anything left.
Yeah, I mean, you'd be
Like a
talking
95.
about, yeah, you'd talk
Over
about
90% decrease.
90%,
Yeah.
90% decrease.
Well, you know what's interesting about that is like everybody seems to be like we were looking at the volume that Hex has done on the main pair on V1 before we started, and like Hex has done like almost $500 million of volume from like September, since the bottom in September till now. It's about 121 days, $500 million of volume, which tells me that there's a huge appetite for Hex, and I think it got as high as 7x off the bottom, off the lows. And so there's not a lot of long-term commitments being made, but yet everybody's really bullish on Hex. It's very strange to me that the coin that does have that ability is like the mechanic isn't being totally utilized, but yet everyone's super bullish on the short term. So in a world where there's $500 million floating through an asset in such a short period of time, like in what world does that not lead to higher and higher price floors? What you understand, like with that kind of volume at the beginning, basically at the bottom of a bear market coming into a bull market, that how, in what world does everybody sell the top of the bull cycle, and this doesn't have higher price floors, get more adoption, get more eyes, become a household name, be a better Bitcoin? Like there's like some sort of disconnect between, I think the believers don't believe it. Like, I think they think that there's value here for this thing to rep this cycle, like on a lot of different reasons why it, and like a lot of different headwinds that once you get past them, everyone sees high prices for Hex, but nobody wants to commit right now for like the long term. Like we're seeing, I mean, there are some, but
yeah, we get 1,000 users, right?
I think that's a great point you bring up there, Axis, because I think a lot of people have this sentiment, and you have to look at like what's analogous to where we are now. Like if you look at Bitcoin when it was in its second cycle, essentially, people were unsure. People saw it rip already. They saw a lot of things happen with it. They saw a lot of hope, but it never survived a bear market for them to have any historical precedents for what was going to happen next. And we're kind of in the same place with Hex right now, being the first recovery into a new bull cycle. So I think people have that sentiment right now, like, is this thing going to come back, and then will it sustain? And I think a lot of people who are unsure are going to have some answers this cycle. And if you wait for the answers to happen in order to get in, you're going to miss that upside.
100% right.
Yeah.
Couldn't have said that better.
That's a good point. And I think maybe that discrepancy in the long-term staking data that you talked about, Crispy, could also be due to the fact of like how long Hex has been out and when those stakes were made, right? So it's like during the beginning, there was a discovery period of the system where like the hive mind of the community was talking about it, discussing it, finding the value, and then getting excited about the long-term staking because it was a novel idea in DeFi at the time that it was created. Now with extra price history, the narrative isn't as novel, so the acute excitement isn't as magnified in each individual person. And on top of that, you also have like some people have experienced the pain of being illiquid during a major impulse up. So probably those two things, at least in my mind, explain a decent amount of like why we're seeing a different behaviors on the staking data.
Yeah, I could accept all those as possible answers. There's probably a mix of different things going on. I mean, it's really reasonable that people would be concerned about crypto, right? It is one of the riskiest assets to be in, no matter how I feel about it. I mean, that's reality, because we don't know the future. But everything shows me that the guy who invented X, Richard Hart. He had come out one time. I'll paraphrase it, saying, "Hey, the best thing about crypto, but right, time in the market, not time in the market. All right, hodl. What's better than hodling? Hodling and by staking and earning yield. What's the best way? Best way to stake as long as you can. What's the second best? Build a ladder. mirror TradFi. Right? There's like 10,000 books out there you can go find on certificate of deposits and how to build a ladder to maintain your what they call liquidity of fiat, right? From the rolling of CDs. In any case, what it all comes back to and boils down to is what we're describing right now is there is a core group of people who believe in keeping their ladders up. They do. And they're doing it. And man, they're going to be the new whales. They're going to be it might even be, some of these people will be the Poseidons, if they make it that far, for sure.
There's that that table that you posted on your Twitter. I think you had a pin for a while, Crispy, of like the aquatic animal leagues, the staker class leagues, and like what was the year 2020 2040
Well, yeah,
2035?
if we go all the way out into 2040 right now, well, just roughly, we'll just say 2040, 10%, right, of all the T shares makes you a Poseidon. And we're guessing that there'll be about 50,000. It might be less. So 5,000 T shares, 5,000 T shares makes you a Poseidon. Probably in 2040. Now it'll change. It'll change because there'll be more staking and everything going on. Probably that'll be the case. Right.
But
And then if you do that every year going forward, then you are a Poseidon.
So a couple of the ways we were talking strategies before, like different strategies that people can deploy. And if I'm basically looking at the 20%, because any of you guys that have been around long enough have heard these before. But for the 20% of you that's listening that is just new to Hex and needs some perspective on how this game is being played right now, it's really being played on the short end and on the long end and not really anywhere in between. And there's like a reason for that. And Sloth made a good point earlier that people that go short are playing the market volatility, and there is a valid strategy for doing short rollers to try to capture a reasonable amount of yield on the short term and then be able to capture that market volatility at the cycle highs to be able to compound and make a good sale at the top and then come back in and buy back a bunch of units in the next pair to multiply your position 3, 4, 5, maybe 10-fold. And that's important because that's one way to get ahead and become a Poseidon in 2045 or 2050 is by playing that short-term cycle. And the other angle is like going super, super long max length commitments, right? So like the idea that if you fuck up and you mess up the cycle and you don't capture as many units as you thought maybe you had anticipated, maybe you even lose Hex in the process. Well, at least you could put out 5% or 10% of your stack for 15 years and earn back 5, 6, 7 times the amount of Hex as a hedge. And it's a double tiered strategy because on your 7.5, depending on the price performance, you may find that the principal plus a little bit of yield is just enough to get you in a place where you're happy. And, so there's more and more reason to go take a hybrid approach where with some of your stack, you are semi-liquid, and with a smaller percentage of your stack, you're going really long, unless you're one of these larger players. And then you can afford to put more Hex out longer that you got virtually for your commitment in this, your length of time in the system. What do you guys say about all that?
I agree 100%. I think of just like how, again, we have to draw from perspective of other things out there that are analogous to Hex, right? Like Bitcoin, even though Hex is the better Bitcoin, we'll talk about Bitcoin a little bit. It's 16 years old as of January 3rd, which we're in January 8th. 2009 is when it came out. And it was when the first block was mined, January 3rd, 2009. So we're now currently 16 years away from that. So if you're looking at 15-year stakes with Hex and saying, man, that's way too long, well, Bitcoin survives. So we have the potential here to be in the game less time than Bitcoin has already been out and earn a ton of opportunity with the yield as well as a penalty earn. A lot of people don't see that's another way you're making funds. And then you're also getting the price appreciation. So it's super bullish. I think that having a decent position long term, but maybe a little bit heavier on the shorter term is where you have some opportunity, but being diverse across both is important. And if Bitcoin can do it, we can do it, especially if we're the better Bitcoin.
Mhm. I think when you come into Hex, your time frame and your specific goals matter with how you set things up. And so I have a different view than Axis. It's kind of like the reverse view. Like I'm thinking longest, biggest first, and then walking backwards. But I fully acknowledge, meaning setting up continuing rungs to earlier dates. But I fully admit this whole idea of being able to capture a top is a really great idea. I like that idea. And being able to then sit on my hands for a year and not lose that value and buy the bottom. Right. And I think probably all the people on this panel, based on what I know about you so far, you could probably carry that off. But here's the thing is when people compare staking to that, they don't risk adjust it in their heads. Right. And in their calculations, not risk adjusting it, they're assuming that everything's going to go well. They're going to get the top really, and they're going to do really good, and they're going to be able to hold on to that and not chase anything. Right. Which I know I did. I had a lot of trouble with that kind of stuff, holding on to something for a year and a half. And then they got to figure out when the bottom is and hit it. Right. And so like some of the people in chat are saying, one of the lower stress, lower worry methods is to set the ladder up and let it go. But that doesn't invalidate what Axis just said and the modified approach that Rhea just said. Everybody's got to decide for themselves how to do it. But and what's cool about Hex is you can do all of these things. And so then I see the discussion about being able to sell tops and buy bottoms should be a way to convert people who are really traders into the idea of staking.
Yeah, for me, it just seems because both of them are so extreme in some ways, like short-term rolling stakes, or holding liquid Hex and 5-5-5-5 stakes, because they're at the extremes ends of the pole. That's where like you can get the most out of what each of the actions can give you. So if you're staking Hex, you're buying T-shares, and to get the most T-shares, you have to stake it out for the longest period of time. And it's the ultimate hedge versus any of the behaviors that you could possibly do in between when you stake the Hex and when you unstake the Hex. So no matter what, you sell too early, sell too late, don't buy anymore, don't sell at all, like whatever it might be. Assuming Hex does really well in the future, the 15-year stake will do well in that specific scenario. So you're hedging for the maximum upside scenario. And then you have the liquid or short-term stakes for the immediate cash flow, or the immediate, as Chris Mann would say, Hex flow. And then you have the liquidity to still service material needs if you need it, alongside that price appreciation. So it's like by having both of the extremes, you kind of meet somewhere in the middle. But in the middle, it almost feels like, if you're making a stake that is off timed, that it's like you did get the most benefit of each of the poles, and you just kind of ended up with the negative by being in the middle. So to me, it almost makes the most sense to be either at the poles, with the exception of having the ladder, because that's just another hedge for, I don't know when things are going to happen. So I'm just going to make sure I have something at every point in time, so that when things are good, I'm good. And when things are bad, well, it doesn't matter. Things are bad anyway. So if things are bad, you're going to lose anyway. So.
Yeah, and I think it's important to even take some perspective and say, hey, look, even relative to time, we have, if people are going to be staked for 15 years, you have the opportunity to capture the upside that in the second cycle, again, when people weren't certain if things were going to bounce back. So you have this major upside potential in the second cycle when people are still not believers, to be able to buy a ton of T-shares at this really low price and capture the value of the T-shares, which are essentially like Hex miners. It's like getting Bitcoin miners in the early days at a major discount because people thought Bitcoin was crap, but it wasn't. Had they known Bitcoin miners could have been, yielded them hundreds of thousands of Bitcoins, they would have been all over buying tons of miners at a discount. Now's your chance to buy a ton of Hex mining equipment, essentially, to be able to yield you into the future huge amounts of yield that is in a time where people are in disbelief. And so that's like a huge opportunity gap that everybody has the ability to capture if they go long.
Mm-hmm. Yeah, it came from the Bitcoin mining world. And the nice thing about Hex miners is that they don't expire and they appreciate. And Hex has been range bound since it launched on Pulse Chain.
Yep.
So, I mean, look, the upside's a lot higher. The downside's pretty minimal. You're basically capturing something that can convert to a T-share at any time and convert back into Hex. And the earlier you're going to make that commitment and turn it into a miner, and the longer you leave it in the system, it's just going to get more efficient over time, which is the complete opposite of a Bitcoin miner.
Right.
Bitcoin miners get less efficient every day, and you just have to hope and pray that the price goes up. But with Hex, like, you have no liabilities or overhead, so you're just sitting there and your stuff is working for you. And that's what gives you guys now listening the power, is because you're able to capture Hex at a penny or 2 pennies, and that's been range bound for 2 years. And when it breaks that range to the upside, you locked in your miners forever. And everybody else that comes in and buys after you has to buy the mining equipment at a much higher price. And by not staking for 15 years this year, every year that passes by, you're only losing 20% of the purchasing power of T-shares. So like by 5 years from now, you could only get half as many T-shares as you can get today. So there is that cost benefit analysis that you have to go through, but at least you're securing the miners at a couple pennies versus everyone else who's have to be buying them at 10, 20, 30 cents. Because like all 4 of us that's on this panel understands that long term, with any amount of adoption, the price floors in the following bear markets are higher than where they are today.
100%.
No matter what, there's this cult is going to, it's grown a bit of a culture to it. This is going to get bigger, and the reason is because it's the only coin on earth that has a chart of future market supply that's been around for 5 years. First mover on yield, basically, coin that produces more of itself, that protects new and old users alike by immutable code. These are big deals. This is sound money. This is the stuff that Wales Only and I talked about in the beginning, was like, this is one of the soundest monetary systems. Look, BlackRock is going to try to fork Bitcoin, and they're going to try to increase the cap of Bitcoin. Why? Well, because Bitcoin's a broken system. Because unless the price goes to, well, even if the price went to $1 zillion on Bitcoin, when the mining of the Bitcoin runs out, they have to switch to fees in order to earn yield. Well, you're not getting enough throughput on Bitcoin to even be able to make enough money or generate enough revenue to pay off the miners when it's just based in fees. So the system breaks down eventually. Some major change is going to come to Bitcoin. It's spaghetti code. And now you have a conglomerate of the world's biggest organizations that are basically, quote unquote, going to hijack it. They have hijacked it, essentially. And trust me when I say that things are going to change for Bitcoin in a big way. And retail and regular people are going to look toward a better, sounder money. And that looks a lot like Hex, which is a better Bitcoin with immutable code. And even though the price isn't reflecting it now because of the conditions of the market, that stuff will change as clarity comes. And I don't have to look much further than just look at the Xscreener and see Cardano at like bottom of the list and Pulse Chain at number 5 doing $12 billion of volume since it launched. And I know that we have a community and we're trading a lot of volume, and there's real value here. It's here. Like just in the last 120 days, I said this already. Hex did 500 million in volume. That's real. That's real users. It's value. It's inherent in the code level. It's inherent in the volume. It's inherent in the DeFi nature of it. Nobody can stop your stuff. Everyone has full custody of their stuff. We're the smartest group out there. We're the craziest group out there. We're not stopping. So capture your units now. I mean, like, that's been the mojo for a couple of years now. Eventually the opportunity is going to leave the station.
Yep. Yeah, I think there's back to the Cardano concept, right? I think it's important to get some perspective from Cardano here, since that's been a hot topic lately with Mr. Hoskinson. So if we look back at last cycle was the second cycle for Cardano, and it went from 3 cents approximately all the way up to about $3 at the top of the market, and in its second cycle. Now, a lot of people say, okay, well, Hex didn't do that last cycle. Well, that was the first cycle for Hex. So guess what? We're in the second cycle, and we're starting almost, we're starting below the 3 cent mark, but we have the potential upside of something similar to Cardano in its second cycle, where you could see a multi-dollar hex, and that's super bullish for those of you out there that are looking at something like Cardano and saying, hey, well, this thing performed pretty well last cycle. Maybe it's going to do something again. Well, yeah, that was its second cycle. We're talking about a second cycle now for Hex. And third cycles, some will say that are not the best, hottest opportunity for coins. So, maybe not Cardano, maybe some Hexes in your portfolio might do you well.
It's crazy. I just did the calculations, and well, first it's crazy to see the T-shirt rate almost at 40,000. It's just it's less than 500 hex away. But I probably got in when it was under 20K for sure, probably around like 15 to 18, somewhere in there. And just seeing that number slowly tick up over time, it's really interesting because you hear about it when you first learn about hex, get excited about it, etc., but you don't have the feedback from like the world of like what you learned about that's represented in the smart contract. But now being in for a couple of years and seeing the rate, double up, almost basically triple up from when I saw it, it's like, man, like, I could have gotten T-shares for like a third as much as I can now. That's pretty crazy. And I mean, if you want one, the cheapest you can get it for is $900 and 15 years of your time. That's if you want it for the cheapest amount of money, that's how much.
Well, I think one point you can look at there, Sloth, is so we have to give them a couple of years off of it because we're at 240 now, 2040. But back when Hex launched, a lot of us did. I didn't understand Quattro Cinco, man. I didn't. I had no idea why I would do that. Now I understand. I have a whole different viewpoint. So I didn't fill in my ladder real strong until later, right? In 31, 32 and all that. So looking back at it today, I could have gotten all those T-shares at the bottom with Hex being very, very cheap, and it was 10,000 Hex per T-shirt. Could have done that 5 years ago. Did not do that. Now I cannot go back and do it. I can't get either the price or otherwise, right? T-shirt rate's higher, can't get that price. And then a lot of people talk a lot of crap about, how the cycle went down, blah, blah, blah. And I get it. There are a lot of people in pain for a lot of different reasons. But I'll tell you this, we looked at this the other day. If you had been buying EHEX, GCA style, from launch weekly and staking it, you're in profit, significant profit. Better profit than Bitcoin, better profit than Ethereum. But it would have required you to do that. You would have had to buy religiously, have discipline, do it every single week, and do it for 5 years, right? And you'd be winning. And so that's a heavy lift. That's not easy,
Mm-hmm.
Yeah, earning yield is a super powerful mechanism that people are searching for all over the world in different markets and different asset classes. And I think people underestimate it because after last cycle in the crypto market, a lot of things were big rug pulls, and so people have kind of lost the narrative and lost the fact that it's still an important thing that people look for in financial markets to have some sort of yield bearing instrument. And Hex is still that, and it's doing it the right way. And I think a lot of people need to reawaken that hunger for having a yield bearing instrument that they had last cycle. I didn't mention this with Cardano. The reason why it went from 3 cents to $3 is the fact that it offered staking. Mm-hmm. And so guess what? We've already been offering that. And guess what? It's been working flawlessly. And guess what? The code is done. It's not a project, it's a product. And so for people out there that are trying to figure out what is valuable to put your money into long term that's going to pay you best and treat your money best, it's something like Hex.
I was looking at this idea of supply. I was looking at the supply of XRP and Doge and Cardano, and there's less liquid Hex and short rolling Hex than on any of those coins, and all of those coins are trading at like Cardano, 35 billion circulating, 94 cents. Dogecoin, 147 billion circulating, trading at 34 cents. XRP, 57 billion circulating, trading at $2.36. The reason why Hex isn't trading at a higher price with a circulating supply somewhere between 12 to 18 billion liquid short-term Hex, which is less than any of those three that I just quoted, is because we don't have any visibility and we're being gatekept everywhere.
Yeah.
From regulators, from the crypto, mainstream crypto, from everywhere. Like everybody does not like us. That doesn't mean that we should be retards about how we act and deter everyone from participating. You just need to remember how to meet people at their level. Like this, we have new people coming in all the time, guys, and there's a super huge value here. Everybody on Earth needs passive income to try to outpace currency debasement and inflation from our world governments. And this is a solution with immutable code and a future market supply. So it's somewhat predictable. And it's less liquid than the other three quoted coins. But there's enough liquidity there to service the market needs. So it's just liquid enough to give you guys millions of dollars of money to splash around in, but not so liquid that with our small gate-kept community, we can't push the chart around. It's a panacea of opportunity and it's staring you in the face. And I wish for everyone to open up to that idea and move forward and move past the challenges and the struggles and the headwinds and take advantage, because once these prices are gone, I hope you have secured your Hex miners. Like, just capture the units. Decide what you want to do mining wise later, but just capture the units now while they're still affordable. This cult is not going away. It's only a matter of becoming more visible for the public at large. This Hex will be a household name. It's such an easy thing to say. It's really easy to understand. It prints more of itself. You know, once you're above your cost basis, by the way, once you're above your cost basis, what is the reason not to try to capture more of it? And as that confidence grows at a market-wide level, it's just going to steamroll and compound on itself.
Michael Saylor.
Well,
Look at Michael Saylor. Yeah.
It's not just when you're above your cost basis. It's when you're permanently above your cost basis based on a new in a new epoch of supply distribution, right? And so, you know, obviously this is things you guys, us three and us individually, have talked about before, but the distribution of supply and how it's represented in the chart and how it cements certain price floors. If you play one cycle right, with the assumption that the thing continues to do well, and you're able to capture units at a price that never gets seen again in the future, then you're really in a position of power to utilize the mechanisms of the system to accumulate more units without having to add additional capital risk to your position, as well as play fun games like liquidity providing, short-term staking, etc., etc. So it's like that. Yeah, go ahead, Crispy.
Let me see if I can say it this way and see if this meets your point. I think Johnny Chaos might have said this before. Our intent is to not sell Hex. We don't want to sell anymore. Well, our intent is that it's so valuable, you only need to sell just a very tiny amount. And the way to make that happen is by accumulating more.
Yeah.
Or at least the way to make it happen faster for you individually is to accumulate as much as you responsibly can.
I mean, technically, that's how all these markets work.
Yep. We were talking about earlier how much. So 40K Hex to get a T-share at this time, and then at the T-share rate is adjusting daily and getting more and more expensive to buy a T-share every single day. What that means is that if you hold Hex and you have it staked, it essentially makes you a Hex miner. And so you can actually have this Hex miner that actually becomes more valuable over time and mints you more Hex. And that price, we were talking about it increasing every year about 20%. So whatever Hex you have staked is increasing at a rate of about 20% annually. And that's huge just for mining, for having that miner in Hex. Now the yield you get, that's a whole nother thing, as well as the earned penalties that you can earn.
Yeah. You know what helped me? So I was a little bit broken as I got into Hex and tried to understand everything, right? But eventually figured out a whole bunch of stuff. and finally came to the conclusion that I needed to be doing Quattro Cinco stakes. That's why, I had already been doing them, but I mean, the idea that even now, right? Like I'd be in my 70s, maybe I'm talking about going to my 80s or 90s. Why the hell do I want stakes? But in terms of the game, I need to be doing it, right? Because that'll earn me the most hex. And then Axis really turned me on to this idea that, hey, you know what? What are you going to stake, dude? You don't have any hex; it's all stake. And that turned me on to this whole 30-day roller, right? Or some similar amount of time, because I can't go stake in the future yet. Not Matty Allen. I can't go in the future, right? So that means I got to wait for time to go by. And so then the question is, where the hell does the hex come from? The stake, And so that's another reason for these short rollers that some people are doing.
I'm just mind blown that we're already in year 5 right now, and that's a third of the way to year 15. So those are for the people that have staked hex in year 1 are already a third of the way through their 15-year stakes, and that's incredible. That's crazy. And we're just starting to get some mainstream crypto adoption here, and this is just the beginning.
Yeah, we got a bunch of people they ask me all the time about what do I need to what do I think is going to happen with what do I think was going to happen with all these 10-year stakes? Will there be emergency end stake and all that? And we haven't seen the guys do it yet, the folks do it yet, but they could do it at any time, right? They could, we're in range now. The 10-year stakes that were made 5 years ago, just like you're saying, right? We're 5 years in, they could start ending, right? And if they were to start ending, then that would be the case. I just because we had asked for it before, Ray.
Yeah.
Mr. Speakmore, I just threw this up on the screen here. Maddie shared it out for us. So this is just showing us how the T-share rate has gone up from 0 on day 1, well, day 2 or 3, whatever, but to 10K, and now has gone up to the 40K. And as you were saying, what's happening is it's becoming about 20% more expensive for a T-share as we go along. But the number of T-shares are also dropping 20%. And so roughly, I'm just kind of like making up an average, right? So while the number of T-shares are going down 20%, each T-share is earning more. It's earning more in payout, right? So payouts are going up. And so we've got some models that show, I mean, I don't think the most extreme models will come into place, but I mean, if we really saw a significant fading of long-term staking and T-shares, it could be 200 hex per day per T-share.
Yeah, we had
my number.
Was it 2022? We were getting about six-ish hex per T-share. Now it's I'm seeing it break, topping out at 8 a lot of days. And so, depending on what type of day it is, we're seeing 8 happen probably 3 out of 10 days at this time. So that's crazy. I can't believe we're yielding that high at this point in time. So get your T-shares.
Mm-hmm. Mm-hmm.
Yeah, this is important here. This chart showing these models about how much per T-share you could be making. This is the reason why you just have at least one long-term stake, because it's just a hedge. It's just a way. If you're in hex for this cycle for like a 10x, a 20x, a 50x, a 100x even, you can get that on any meme coin. You can get that on a meme. There's like a handful of meme coins that are like somewhere between new enough where they can still get 50 to 100 X's and old enough that they're going to be around for a long time. That if you don't want to stake hex, why are you even messing with hex? Like, go find your 50 or 100x in something like that it's out there. But like, hex gives you so much more control and power over your money, and that comes from the mechanism that's built into it. It's designed to pay you to hold it. And so that's where I kind of come back to, you really have to either be thinking lock and roll to capitalize on the short-term volatility. And if you do that well enough, long enough, you could take just a small percentage of your profit and once a year go 15 years. And in a decade from now, you'll start having long-term stakes, one per year coming off perpetually till the end of time. And it will all have been house money that you made back in 2025 when you started your lock and roll ladder. That's something that Maddie helped me coin at last year's Hex conference. It's
Lock, rattle, and roll. Right.
such
Put
a
that to
powerful
music.
system with no one way to play it. There's like 9,000 ways to play this system. I think we've just given you a few ideas today. And because of that, it's very sticky and it does have a lot of upside for price. And so, like, if you're in Hex and you're just trading it and you're not using the mechanics, like, I don't understand why you wouldn't just go trade something else that might do a 50x, because that's what you're basically saying about the system. But this is showing how high these long-term payouts could really amount to.
There's some people out there that have never started a 15-year stake because they're apprehensive. I would say that for those of you out there that are in that boat, just start a small 15-year stake.
I think a lot of that is because it got mystified because of the pre-pig payday stakes that got hurt so bad for ending early. But in the nowadays, once you get to year 7.5, you can pull off all your principal and you're in the clear. And it's just like, as long as the price is higher than when you started, you made money. So you got to think differently about 15-year stakes nowadays than back in those days. Yeah.
Mm-hmm. Well, I'm super conservative about everything. Maybe too conservative, I know that. But regardless, that's kind of my approach, right, to things. So when you say have an exposure out there, I think that it is so cheap to have 15-year exposure for one T-share. Like, why wouldn't I do that? Why wouldn't I just make myself a dolphin if I had the wherewithal to do it? And if I can't do dolphin, I go down one level, right? Because the asymmetric possibility that this thing is like off the hook, 100 times, 200 times the price is just insane for that ability. And the whole time you'll be earning Hex. Now, of course, none of us knows what really happened with Hex in terms of price, but I know for certain the way the contract operates, you'll have more Hex, lots more Hex, by doing those long stakes. So when somebody's asking, like in the chat, like what's a good exposure, I think if you can get one T-share a year, I would do that. I have to monitor it, make your own decisions, of course, but that's what I would do per person.
Yeah, if you could front run yourself and you're thinking 15 years of accumulation, just get yourself 15 T-shares up front. So.
Well, I think people will believe me, right? I just showed you guys the chart, and I showed you how it went to 40,000 Hex per T-share, right? You have any doubt that the T-share rate goes up every day? Well, almost every day, but that the T-share rate goes up over time? Is there any doubt? There should be no doubt. Contract works. It does what it does. We got 5 years of data. All right. It's going to be 300,000 Hex per T-share minimum in 15 years. Insert your own price, multiply it by 300,000. That's what a T-share is going to go for out there. So if that's $1, that's $300,000 a T-share. If it's $3 or $3.50, it's $1 million a T-share. And this goes back to, again, because I'm not one of these guys that come out and say, "Hey, only stake Quattro Cinco," because I think you need to have exposure to whatever's going to happen, right, in the next 15 years. But damn, I did think it through. I said, well, what if, just like today, I'm still interested in Hex, right? And I'm still interested in 15 years, and I didn't get my stakes. I'm going to pay $1 million a T-share? No, I'm going to get them now. Those will be my rock and roll T-shares out there, right?
There was another stat that it's just interesting. And no, I never heard anyone say this, but I was thinking about what I wanted to talk about on the conference this year, and I was thinking to myself, well, what if everybody on Earth got one T-share, one 15-year T-share?
You can't.
That's right. That's right. If you did 1 year's T-share, it would be 320 trillion Hex. There isn't that much Hex on Earth.
Well, you can't, because of the way the system's designed and the amount of Hex that's actually circulating. I think even if the OA chipped in 20 million max, maybe right now it's a little bit higher. Actually, I have a chart. Let me just pull it up while we're here sitting on it.
And Crispy Man, that's because there's unavailable Hex that people can't even get access to, even if they wanted to right now, right?
Yeah. Let's look at here. It is max T-share right now. Where are we? Max T-shares. And what happens? What's crazy about this is every day that goes by, the max number of T-shares drops, right? Because the T-share rate goes up. And so right now we're sitting with over here, right? 2025, right around here. And so not exactly on the right date, but maximum number of T shares is 55 million right now, 55 million point seven on Pulse Chain. That's the maximum number. And on Ethereum's just a little tiny bit higher at 55.8. But when we get out all the way here, 15 years, the max will be somewhere around 20 million. So
Yeah, I
so
just
you can't
calculated
even,
less than
yeah,
that
every
even. So this is super crazy. Yeah, you just can't, like, not everyone on earth can have this is better than the Bitcoin narrative because this is immutable code. BlackRock can change the total Bitcoins.
yeah. Yeah, I mean, we don't even have you can't even make enough T-shirts that everybody in the U.S. can have one.
No, and I mean, like, look, you get like someone as degenerate as Michael Saylor into Hex with that kind of willingness to go leverage long on Hex, and there's just not enough Hex for even just a million millionaires. There's just not enough. That's what people don't understand is how scarce it is. I know Storyteller does a really good job on Twitter of reminding us that there's just only like 12 to 14 billion Hex circulating. That's nothing. It's like $150 million market cap today.
Yeah,
it's just nothing.
It's basically designed, and we see the data here with the 5 years of price history, to have inbuilt supply squeezes. Supply squeezes, assuming adoption comes, right? So it's like if that adoption comes, then the supply it's designed so that there's not enough supply to service that demand without an impulsive move. To
price has to go up. Yep,
price has to go up.
So
and then there's another.
So consider this as you're talking, right? I threw on the screen for everybody just to show you the difference. This is non-OA, so OA is doing nothing. Just so their Hex is locked away. Just assume that the maximum number at the end is split all the way down to 8 million. But today it's like 10% or something, right? It's so the other chart showed us 50 million. Right now it's right around 11 million. Is the maximum number of T-shirts right now with all of the circulating Hex that's out there that is non-OA. Go ahead, Sloth.
I think the one thing that people miss out on is they forget that Hex was created by someone who was a Bitcoin miner. It could have been, the person who created it, Richard Hart. He could have made any sort of project, but he saw that there was a need in the market to create a better form of mining. And so these were his creative choices to build something that could actually yield you a powerful amount of yield, as well as get rid of a lot of the negative externalities that Bitcoin had when you mine Bitcoin. And to know that about Hex, there's many reasons besides price performance that you should have the ability to purchase a T-share, so you can actually build your own portfolio up, earn yield over time, and not have to deal with whether it's polluting the air in your house. If anybody's mined Bitcoin, they know how bad that stuff is for you. You can't really breathe the air of a Bitcoin miner. It's pretty toxic. And then you have huge energy bills. You've got hardware you got to deal with putting somewhere. I knew a person who was mining Litecoin, and their house got so hot that rats infested their ceiling, and almost burnt down the neighborhood because everything caught on fire. Yeah, there's a lot of problems with that. Now with Hex, you don't have to get equipment in order to mine Hex. Everything's done virtually, and you can do this over immutable code, which puts you at the steering wheel of being able to execute this code. You don't have to use a middleman, and you also don't have to have expensive, dangerous equipment in your house to do so. So it's super powerful. People are still underestimating what its potential is, and it's not getting any cheaper.
Yeah, what I was going to say before is to add another dimension kind of on top of everything we're talking about, especially now that we're kind of closing in the last 10 minutes, is a lot of the conversation has been about like the the units of dollars that you can accumulate based on the scarcity of based on accumulating T-shares and juxtaposing that with their scarcity going forward into the future. But one way I like to interpret things, or at least view things, is not just as a units of dollars that you can get, but as you start to separate your portfolio value relative to other people more and more over time, you also get more like power. And the accumulation of power through your crypto bags has been very interesting for me to think about, but it's even more applicable to us with the ecosystem of Pulse Chain being starting to unwind, and all these different sub ecosystems starting to form. And so, the scarcity of the T-share also, let me take a step back. If you think about Hex as its price being a denomination in Pulse, and Pulse being the thing that everything else is denominated in, and so your ability to get more Pulse, basically, or more units of value relative to the whole ecosystem, gets more difficult in terms of the Hex inflation mechanism. That is a really interesting dynamic that I think it's good to add on top of things as well, because there's more implication to accumulating these T shares than just like the dollars you can extract out of the system, but also what you can do in the system in terms of how you can change things, how you can affect things. And this is more on like the market maker and whale side of the conversation.
Yeah, simply put, like your mining equipment in Bitcoin expires, but if you lock in Hex at a penny, you have that for the rest of your life. As long as you don't get hacked, as long as you didn't go give your keys to somebody on the internet, like you're locking in generational wealth. Like I'm convinced of that by now. I mean, I have been for years. I quit Bitcoin and Ethereum mining for Hex in a lot of ways, went full on DeFi. And by extension, you talk like some of the advances in MakerDAO, and which is now Sky, or Aave, or the DeFi platforms, which will have a resurgence this cycle. We're looking at a possibility. We already have something like Flex Protocol where you can collateralize your Hex into a vault and borrow stables from it, so that you can have infinite utility built on top of Hex. And I expect that the more concrete, confident, long-term, more people get bullish on Hex, the more stuff's going to get built on it indefinitely. Look, there's already a guy that created a thing that can pay you. Well, there's Actuator, there's Communis, there's encapsulated stakes through icosahedron. There's stuff out there that is powerful and valuable. It's being mispriced right now due to the the negative stuff going on around the ecosystem. But generally speaking, like there was a point not too long ago where you could go stake for 15 years and get 20% of your money back. And I know Crispy's one of those guys that capitalized on that. And if you don't know what I'm talking about, go look at Communis. Like it's out there. We're Super Bowls on that stuff. It's like pay people to automatically. Communis markets long-term Hex staking on its own. If you want long people to stake long, pay them to do it. And then back to the original point Sloth made, like you can't understate how important it is to seize the opportunity now to capture something that you'll never get ever again. Like this is a once in a lifetime shot. Once it becomes cool to buy Hex and that it's mainstream, like it's not here anymore. It's at other prices. We already just explained in detail how scarce Hex is right now relative to some of these other major cryptocurrencies. It's just a visibility problem and a gatekeeping problem. It's not. We have the cult, we have the community, we have a working L1. We just got to get out of our own way and use the tool. So such a tremendous tool, and we got to thank the founder for all the work he's put in over the years, and thank the community for sticking through, because you're in the right place. Y'all know it. You're just ahead of your time, so stick to it.
Yeah, the people who made the most, and Richard Hart said this so many times, are the people who bought crypto in the early days or mined it, forgot they had it, looked at their wallet 5 to 10 years later, and were just mind blown. Imagine forgetting you had Bitcoin, and then today looking at your wallet at $100,000 per Bitcoin. 15 years later or 16 years later, you'd be in a different atmosphere. So that's the potential with Hex. But what's great is that not only are you sitting on it for the price appreciation, but you're earning yield that entire boring time when most of the time nothing's happening, that you're actually earning yield as well. the potential is so much bigger than Bitcoin, and people are missing it.
Mm. Yeah, it's pretty huge, I think. You know, pretty huge.
I think there's a lot of things going on under the hood, man, that gets me excited. That goes beyond just Hex, but it all comes back to Hex in the end. I know you guys out there know what I'm talking about, and it's a deep web.
All roads lead to Hex.
I mean, just like first grade mechanics here, we could just talk about the other coins in the Richard Hart ecosystem that are positive impacts for the price. You know, we have Pulse Chain, Pulse X, and INC as positive mechanics to the Hex price over time, and that's just scratching the surface. So we wanted to go over PDI a little bit, huh?
Before you do that, I gotta say this. Like, I know we talked broadly a lot today, and that's good because that's what most people need to hear. But just for the nerds, by buying Hex, it gets a double pump because all of the exposure into Pulse Chain comes through Pulse. So if new money comes into the chain, first it has to pump Pulse, and then because Pulse appreciated in price, you're getting more. That guy's getting more purchasing power that then goes into Hex. So. And Richard made a tweet about this in the past too. It's simple. It's how the AMMs work. It's how Uniswap V2 tech works. You have to pump Pulse to pump Hex. So pump gets an amplified pump on top. And because it's more illiquid, it's liquid enough. It's got 20 million on it right now on the main pair. But it's illiquid enough too that it has a huge upside when it gets that double pump. And then at the same time, you have Pulse X out there that's just continuing an uptrend versus Pulse forever so far. And that's acting like a magnet that's pulling the whole chain up and up and up based on supply and demand, based on real volume of real human and user interactions with the protocol. So it's the amount of supply burned away is proportional to actual user activity on the chain and volume flowing through the DEX. So it's not just burning for the sake of burning. It's burning based on people actually using the shit. So that human user activity is making the whole system more valuable, which is making Hex more scarce and more valuable, which is making Pulse more scarce and more valuable. And so this whole system is designed to pump. We just got to get out of our own way. We got to get rid of the gatekeeping. We got to get past the case. You know, this all was launched in good faith this was new technology, never been done before. And in the method by which it was done has never been done before. And I was there at the hearing, and I mean, these lawyers, they put up a pretty good case for, you know, everything being above board, and we just want our L1, and we'll get it because we're on the right side of history with this one, guys. So I'm very excited and happy to be a part of the Hex conference again. Thank you guys for having us on the stage, and I hope we helped remind you of how scarce this stuff really is, and try to help motivate you to get out of your own way on some of this stuff and get with the program. It's time to move forward.
2025, it's our year, guys.
Oh yeah, man, it is. Hey, for extra bonus, I know Matty said in the background here he might be busy at the moment, not be able to get back in to do the changeover. So we've got a few more minutes. Yeah, there are a lot of interesting things. You kind of hinted at it. I know we talked about it in the green room a little bit, but my simple observation: love it or hate it, right? We talked about PDI being out there. PDI has sunk liquidity, both V1 and V2, as well as a whole bunch of other places. And my observation has been that people have been using PDI to pump Hex. They rotate back when the time comes, and when they're ready, they rotate it again. And so I've just been seeing this kind of like flippering action, right? Don't have anybody interpret my finger movement. But anyways, seeing this action, right, between these pairs, and the two of them going up. Right? And I don't know if you guys got anything to say about that.
Yeah, I've noticed the price action is keeping those two relatively close. I think people know the long-term value of Hex and that it has the potential to go way beyond $1. Those who have been around for quite some time understand that concept. For those of the people that are being attracted to the dollar narrative, they're coming in on PDI. But the people who understand the bigger picture of Hex, they're rolling over to Hex in the long term. And I think that's a good indicator to say that potentially the same could happen for any other coin that's in the on Pulse chain to roll over to Hex over time and continue to push Hex to the upside.
whether or not PDI goes to $1 first or ever, or Hex goes to the $1 first or ever, they both meet it at the same exact time. There is obviously only one place to go after that dollar's hit, and that's into Hex. So I would encourage you to think about that. When you're placing your bets, it's just safer to have Hex, but it's also valid to think that PDI might get there first. However, the chart's not saying that. It's every time that PDI and PHEX hit parity, Hex takes the lead. Now, if that's by design or not, I don't know. I can't say with certainty. However, having a bit of both could be a solution. I know there's a lot of volume rotating through that ecosystem. Like it's you don't have to look very far to go back and remember that Richard was talking about the world's largest airdrop and what it would mean to get something for nothing. And then when those copies started to create a market amongst their east side counterparts, that he wasn't just saying that to say that. I mean, I think I thought he was a bit nutty back then, thinking like, how could you compete? How dare you try to compete with Ethereum? But now I'm starting to see that, somebody that's well-funded enough and motivated could actually take a lot of these coins and peg them to their ETH counterparts, or at least make a good forceful effort to get these things at some sort of meaningful valuation versus their ETH counterpart. And so I think all of that bodes nicely for upside for the whole chain. So I'm excited, man. And it's all going to come back to Hex.
Let's go.
Love it. Yeah. Very positive, well-informed talk you guys had. Really appreciate the panel and everything each of you do to get the word out about Hex. And so thanks for being up here, guys.
Thank you for the invite.
Absolutely.
Thanks
Thank you, Maddie.
Thanks for putting it on.
Appreciate it.
Thanks to everybody listening, man. Appreciate that.
Yeah, hit the like, share this out, follow all the speakers here on the screen. And up next, we have another 4-person panel after a 45-second interlude. Thanks.
See you guys.
See ya.
Let's talk about the highest appreciating asset class today. It's crypto, not stocks and bonds. Boy, this ain't for play. My word plays to educate the children around my way, so they can get out the hood. No, I don't wanna stay. Education's critical in my life, pivotal. Could have been in jail or dead. Yeah, it's just that simple. But back to investing. Here, take some notes. Never go all in like jumping off a boat. Dollar cost averaging. Google that term, so you can keep your shirt on, so you don't get burned. Now there's a risk to all investments. This you should know. You can take yearly profits and get ready to.
What's up?
All right.
Hey, Maddie.
Hola. What's going on, everybody? What's up, Maddie?
Yeah.
So we can thank Corey and Investor for that banger.
The
voice sounded familiar.
Good stuff.
All
Good
right.
stuff. Yeah, super excited to have you guys on the conference again this year. And I'm going to let you guys take it away for the next hour for your panel discussing all things Hex.
Thanks, Maddie.
That's good. Thanks, Maddie.
Thanks, guys.
Thank you, Maddie. All right. So who's gonna start this off?
What's going on, Jenna?
What's going on?
Not much. First time I've been on a stream with you guys, so I'm excited for this. I've been on a few Hex and Pulse Chain conferences. I've chopped it up with a lot of the different influencers, but I always like to speak to people that I haven't spoken to before, get different opinions, get different perspectives, and so I'm really looking forward to this segment.
Yeah, I've never been on with you guys. I think Corey might have stopped by for like one of the celebration streams or something like that. But yeah, I've got a full hour, so this is going to be pretty cool. I don't even know where to start. I've kind of known Corey without meeting him over the years. I missed him in New York, so I'm sad about that. But Frank and Beaner, man, tell me about yourselves and how you got your start into Hex. I guess we can start there.
Yeah, I guess I'll go first. I mean, when it comes to this particular asset and when it comes to Pulse Chain, PulseX, I could talk about it for days. I can rant about it for hours and hours and hours. My background is traditional finance, so I come from a very Wall Street centered type of mindset. And the beautiful thing about that is that whenever you take the principles you learn on Wall Street and then you apply the long-term mindset, and then you remove your emotions, the positive outcome that you get on the most volatile asset with the most gains is astronomical. I can testify for that for sure. It's very exciting whenever you can remove your emotions and you can see corrections happen. But because you know what you hold, you're not fazed by it, and you kind of just see it as an opportunity to buy. That's how I've been reacting the past couple months, couple years as we've been going through the correction. So that's my background: macro, big long-term holder, the traditional Warren Buffett philosophy of investing. You buy one thing, you never let it go, but you got to make sure it's the right thing. So
Well, Hex is for you then, right?
Yeah, for sure.
Especially the 15-year thing. I come from a TradFi background as well. I guess I'm more on like the medium to long term. So I'll like swing positions. I'll have like forever positions, like an Nvidia or a Meta or something like that, and maybe I'll trade around them. But usually I like I'm at that point. I admit perhaps I'm ahead of you in years, but I'm doing more dividend investing and passive income, kind of like this crypto thing. Yeah. So is it funny for you because like being in traditional finance, coming into crypto and then going back, doesn't it just I liken it just taking the edge off, because the volatility in crypto is like nothing you see in traditional markets. Like you can have huge dips and like, multi-percents in like a day or something. But if you've done crypto and you go back to stocks and whatnot, that's easy in my opinion, dare I say it. But it's like the volatility isn't anything compared to this side.
Yeah, people take this misconception that you think is going to become easier. Once you get a taste of it, you don't go back. Like I tried to go back, and then I was like, nah.
Oh, all right. I still do both, but yeah.
Yeah, but I think it's because from a younger perspective, younger generation, like, okay, I have the time to take that risk, so why would I go back? So I can stay in crypto, and especially, see, the way that I take it is I don't like to put Pulse Chain, PulseX, and Hex into crypto. To me, it's DeFi. I put it in the same category as Bitcoin. And like you have to understand what Bitcoin is in order for you to understand what Hex is. And if you don't understand that, you're gonna think this is just another venture capital, freaking, private equity type of coin. And then that's where a lot of the misconception and misinformation comes out there, because if you're chasing that, you're chasing crypto, this isn't the place to be. This is supposed to be DeFi, real DeFi. Like you take control, you take possession, you understand how it relates to Bitcoin, and you understand the philosophy behind it. And when I understood what Bitcoin was, and then I saw the opportunity where I can go into Hex and PulseX, the idea of going back to TradFi seemed asinine. It became like, why would I go back? I would only go back to just fuck around. But I know that the real gains are going to be here, right? So that's how I kind of see it.
Yeah, there's a couple other things too for me. I actually come from TradFi a little bit as well, so a little bit of panel of TradFi here. I have been solely in crypto now for a few years, and I don't see myself ever going back to traditional finance. And I think part of that is that I have more control over my own investments, and that truly is what decentralized finance is. Bitcoin, yes, decentralized, I love it, I would never talk bad about it, but with the ETFs, with all of these big players in, like, the decentralized part of Bitcoin is becoming a little bit less decentralized because there's so many big players involved now. The ETFs, governments, BlackRock, like there's just some people that I don't necessarily trust that have a lot of control over the Bitcoin now. With Hex, look, we say it's a better Bitcoin. And I believe in many senses it is. And one of those is because we're talking about true decentralized finance. Like I can take the Hex contract and I can run it on my computer. I don't need a middleman. I don't need anything. I can literally run the program, run the code on my own computer, and I can interact with it. No one needs to touch it. No one needs to be involved. And that is what it means to sort of separate myself from sort of the traditional finance. And I'm not talking bad. I have a lot of friends in traditional finance too. It's just I've moved on from that. And like you said, Frank, for me, it's really hard to go back. And part of it is that I really like the ability to have responsibility for my own actions, to control everything myself. But also it's like, I truly believe in this, and I believe in this long term. Like it's also a statement of my belief system. And I think that's important too when it comes to DeFi.
Man, you touched a lot of good points, but I'm gonna let Corey give on his thoughts on that because I want to hear what you have to say.
Hey, well, I'll say this. I did not come from a history of TradFi, okay? I'm probably the only one, okay? My parents, they worked a traditional job, insurance company. Most I know about is 401k and company stocks. So that's kind of how I came up. I really started understanding a little bit more about stocks and the market when I started working in my career job, which was at Verizon, telecommunication company. So a lot of people there, they were in the stocks, they were into the market. And I learned there first about even investing to that degree. And slowly but surely, I got into real estate, and I was looking for a way out, just like everyone else, looking for a better way to make money, provide for your family. And I, again, found out about crypto due to my son. One day at a dinner table, he's like, "Hey, guess what? My friend just bought a Tesla with Litecoin." I was like, well, I'm like, hold on. I just looked at him, and then I looked at myself, and I said, "What am I doing wrong?"
Yep.
I said, if a kid in high school could figure this out, I think I need to look into it. So that was my whole rabbit hole starting around 2016. And again, following influencers, not really knowing the space, again, getting to know the language and, cryptocurrency in general, scams, and got into BitConnect and went through that whole travesty. And in 2018, 2019, found Richard Hart and again got a little bit more of the education about what decentralized finance was. And again, a lot of this is just education. Like a lot of us aren't aware of some of these vehicles that are out here, and just being aware of it and having an interest. It's fulfilling my interest of wanting to retire early, wanting to take care of my family, benefit from it. It just rang true when he said, Bitcoin did a million X in less than 12, 13 years at the time. And I was like, hold on. So you mean tell me $1 over 12 years, I'm about to do 30 years. I can do a third of that and probably, supersede that. So that brought my interest to the space. And that's when I went down that rabbit hole. And here we are today with learning more about it and seeing it get regulation and actually seeing players actually come to the table and really want to see this thing flourish. So I'm happy to be here, man. That's all I can say.
Yeah, man, it's like the highest asset class in history. That's another Richard Hart-ism, I guess, and I guess other people have said it too. But I mean, it's true, and it's like, how could you ignore it? Like, I'm the same thinking as you. Is like, I didn't know anybody that bought a Tesla with Litecoin, but I understood. Like, man, I want to get out of this like 9 to 5. Yeah, I started my own business and stuff like that, but that gets a little tired after a while. You still want your independence, you know what I mean? And I'm able to do less of that now, and crypto's giving me that flexibility. But yeah, that's what it's about, man, is like learning and understanding. You brought up like a key point there is the education, and I think that's like the big thing with Hex, Pulse Chain, PulseX, DeFi, as Frank was saying. Like that's the kind of like the catch, the perk of this whole ecosystem. Like it's true DeFi. Like we got tens of thousands of validators, running with our own decks and all sorts of products on it, like completed forks from Ethereum, and it's running community built like it should. And if more people understand that, people are impressed by it. Like you got guys like Shill Gates come over and be like, man, I didn't know that all this was here. Thanks to Hexologist, he got him over here, and he's like, this is a community. You have all this stuff built. He's like, I've been missing this. That's what we need more of.
Shout out to Shill. We're actually gonna have him on our channel next month, so that'll be
nice.
a good time. Nice. Yeah, I have a question for you guys. So, what about Hex? Just give me one or two things. Because obviously there's a ton. Give me just to start us off, give me one or two things that make Hex true DeFi in your opinion and that you like most about it. Because there's a lot of aspects that set Hex apart from other potentially considered decentralized, cryptocurrencies. I don't think everything that says it's decentralized is decentralized. I think we all know that. So what sets Hex apart? Give you one or two things that you think sets it apart and makes it true DeFi.
That's a very, very good question, because I think I'll kind of tell you my path that I kind of went down the rabbit hole of what I call unplugging from the financial matrix. When I was in TradFi and I was watching a lot of the Michael Saylor things, and I was understanding what money is and what money really isn't. And then when I think the biggest thing that pissed me off the most was when I understood that real estate and stocks didn't really appreciate in value. It was just keeping up with the monetary debasement. And then that led to understanding, okay, what is actually the solution that Bitcoin was offering, right? Everybody talks about DeFi, decentralized finance, but it's not controlled by an entity. What does that actually mean? And when I went down that rabbit hole, it was the same time that I went down the rabbit hole of Hex. And then when I discovered that every other cryptocurrency out there was backed by Wall Street in one way or another, and then the one thing that wasn't was Hex, that was my edge. Because if you look at everything else out there is backed by Wall Street one way or another, either through private equity, through venture capital, through some sort of institution, through some sort of business, through some sort of corporation. If there's a board of directors, if there's a CEO, if there's any of that stuff making decisions, and they're pocketing the majority of the quote unquote shares on the market, and they're dumping on you, that's not DeFi. Somebody else is in control, and someone else is pocketing from retailers coming in and coming out of the market. And when Hex, and basically Richard said, fuck you, I'm not going to give it away to centralized institutions. You have to buy it off the market. You have to buy it from the individuals who held it. If you want a part of it, then that's how I knew that was true DeFi. Because they didn't get special privileges because they were institutions. They had to participate just like everybody else.
Fantastic point. And also, even with the cop, I know this is Hex, but like even the copy of Ethereum, right? It's like unless you're holding the coins in your own wallet, you're getting nothing, right? So nothing's going to people keeping money in exchanges. Nothing's going to people or the exchanges themselves, right? It's going to the people that truly believe in being self-sovereign, people that really believe in holding coins themselves and being responsible for their future. So I think that's sort of the same ethos that you're talking about, Frank.
Exactly.
What do you think, Corey?
I'm right there with Frank. Like how he released the project and saying it was a finished product and not a business or a corporation. Like that's kind of how I got to understand what BitConnect was when I got into it. When that cease and desist letter came out in January 2018, and then they just closed the doors and shut it. I'm like, oh, I didn't know it was a company. I thought it was a bot that was trading digitally online that I was working for us, but it wasn't true code. It wasn't true, DeFi, should I say, or crypto for that matter. And so like just that whole idea of how it was released to the people, the mechanism of how it's used like a CD where it stores value. And again, going down the rabbit hole, you understand the Federal Reserve printing the money. Like you said, things aren't going up in value. The value of the dollar is going down. So when you put that, when you correlate those two things and you say, okay, what is holding value? When you see that the dollar is losing a tremendous amount of value against all cryptocurrencies, it just makes sense to be in a cryptocurrency, you know what I'm saying? And to be in one that functions like a CD, where you can have delayed gratification, store a set amount of economic energy today for tomorrow, it compounds how much the value will be in the near future. So that's what it was for me.
Yeah, I think you mentioned an oldie but goodie, like the CD aspect. Like that to me, I know we've gotten away from that language, but kind of like old school investors get that. They get the putting away of an asset and earning yield on it. And that to me coming from, of a more traditional background, it was just like, oh, I get that. It's just like an easy way to explain something. And I think, we could use more stuff like that just in all of crypto to be like, well, it's like this. If are you familiar with this? It's like this. So CD on the blockchain, that's, I'm glad you brought that up, because I hadn't heard that in a while, but that's kind of like what, one of the many things that drew me to it. Pretty much like my thing is just the control, the personal control, and the flexibility. So like you can hold liquid if you choose. I prefer not to. I'll have like a little liquid here and there, but mainly you can stake long. You can ladder it out, which I did from the very beginning. And once those stakes come due, you can restake. You can kind of like fill holes into your ladder. You can combine stakes if you want. And to me, like that you're your own bank. Like nobody else is doing that for you. You don't have to pay somebody else to do that for you. You don't have to make phone calls or type up emails and be like, hey, can you do this for me? Can you do this for me? No, it's all in my control. It's all in your control. And anyone, here in the chat and crypto who takes the time to learn it, that's the control they have. And it's, the beautiful thing about Hex is you earn, yield. You mint your tokens and it's up to you. And that's, what else more could you want?
Yeah, those are very good points. Oh, go ahead.
No, go ahead, Corey. You got this.
Oh, no, I was listening to Frank. I was just like, good point. That's exactly, yeah.
No, I think you guys brought up a lot of great points. I mean, some of the things that I like about Hex that really make it true DeFi for me is, one, it's smart contract based, right? There's no intermediaries. It is what it is. It's a contract. It's immutable. It can't change. There's no keys. There's no middleman. There's no one that can change what I have. Once I stake my Hex out, I know that once that up, if I interact with that contract, then I'm getting what I said I was getting, right? I'm getting my base plus my yield. And then whatever else happens within that. And, that is really peace of mind. Sure, the price goes up and down, but if you're looking at a long term, like most traditional finance people, they look at a 10-year, 5 to 10 years, for their investments. And so this is not really so different. We're looking at somewhere between 5 and 15 years, in your ladder stakes, or if you want to go 3 to 15 years for your ladder stakes, or 1 to 15 years. It depends on what your outlook is. But that really is a traditional finance outlook, right? A long-term investment cycle, so that you can kind of go through the ups and the downs without having, like you said, Cabana, earlier, that huge emotional swings. Hex being staked out allows you to sort of be middle. That doesn't matter if it's today or tomorrow or a week or a month or a year, if it goes up or down. It really matters what it looks like 10 years from now or 15 years from now or whatever your stakes are. And to me, that's super important. But smart contract, no one can touch it, immutable, no intermediaries. We're running it ourselves. In fact, you can run it on your own computer, right? You don't even have to interact with the front end. I don't know really any other DeFi protocol. There's a couple, but nothing like that I would talk about, where you can run the code yourself super easily without having even to go through a front end. And that is really huge. The tokenomics of Hex are also incredible. There's been many other cryptocurrencies that have really followed Richard Hart's plan and his tokenomics. And I know that isn't necessarily DeFi, the tokenomic part of it. I just think that's one of the things that I like about Hex so much, in addition to the decentralized finance aspect to it.
Yeah. And another part to that flexibility, I'll use like last month as an example, is like if there are known events, I'm not even talking about, court hearings or anything like that, but one of the more recent events was like the 5-year, anniversary. So technically if you staked, day one and you got to half your 10-year stake, and things were, oh man, we're at like a couple pennies at the time, I think. And it's just like, well, people can just end stake and, get out of the system right away. And I was like, I don't want to deal with that. I'll just throw another stake out for like another 30 days and not even have to think about it, instead of like oh man, should I hold liquid? And I bring that up because, some Hex friends of mine are like, oh, what do you think it's gonna happen on December 3rd, December 4th, first week of December? You think all these end stakes are gonna come out? We're gonna have a huge drop? I was like, oh, we could, but I don't care. I'm just gonna stake right past it, and it'll settle out by the time the stake's up, and then again, flexibility. You can do what you want with it. You could take a little off, or you could just extend that stake, or combine it maybe with another one that came out at that time, or just throw it out even longer. So,
yeah, I think the people who appreciate Hex the most are the people who understand either a TradFi perspective, like they've done the rabbit hole and they've gone through the whole financial unplugging of the financial metrics, or they come from a TradFi background and they're open-minded about what Bitcoin is. Because you see a lot of TradFi dudes that are just dumb. They're not open-minded. They're closed-minded, and they still think Hex is a scam and all these, or Bitcoin's a scam and all this stuff. So they're too deep into TradFi. They don't have an open mind to understand it. So you can't appreciate what Bitcoin or Hex is. But the people who do understand it, people who took the time to put the hours and really, really appreciate what Hex is along with Bitcoin, right? Because the reason I compared to Bitcoin is because Bitcoin solved the problem. Hex is supposed to be the better solution to that. So Hex is a better version of Bitcoin. So you have to understand those two things. They go hand in hand. And one of the things that a lot of people argue is like, oh, but your yield comes from Hex, right? That's the biggest argument that I get. Okay, but when I explain to them that when I buy a treasury bond and I have it for 5 years, my yield is also US dollar. So it's the same thing. The only thing that I'm getting yield of is the same instrument in which I lock in or stake my position. In treasury bonds, it's US dollars, or I'm quote unquote staking or holding. I'm making a contract with a third party to hold it, usually Morgan Stanley, Merrill Lynch, or whatever financial institution you want to make it with. I hold that contract with them for 5 years. I get my yield in more US dollar. But in this case, I'm doing it directly with the blockchain. So it's the same concept. The only difference is my yield is more because there's no overhead to pay a banker. There's no overhead to pay a financial institution. There's no overhead to pay a building and all these different things because it's not a company. It's you directly with the blockchain. And when you have those, in theory, you have all these savings. Well, all those savings goes to the person who stakes their position with the contract. So that's how I kind of explain to them that the concept is the exact same thing. The only difference is the financial instrument in which you are staking, whether that's US dollar with treasury bonds, or here it's Hex with the blockchain. And one of the things that I love to use the example is 401k. It's like when I put money into my 401k, I'm not expecting that in 2 years from now, I'm going to be a millionaire. It is a long-term perspective, and I'm little by little putting into my Roth to my 401k, and I'm told that I cannot take out that position until I'm 55 years old. So I'm making a contract with whatever financial institution that's holding my funds as a third party that I cannot take those funds out for the next 30 years. So you take that same principle and just apply it to Hex. I'm making a contract with the blockchain that I am not going to liquidate my funds for the next 5, 10, 15 years. And the biggest barrier that people have to overcome is just taking the same financial instrument ideology that you have in your 401k, your treasury bonds, and just taking those same core principles and just now looking at it from a Hex perspective. And the moment you can do that, you start to appreciate it a lot more because it's the same principles. The only difference is you're going to get paid a lot more because Hex not only does the same process as a treasury bond and a 401k, but it's now trading against native currency. So anything that trades against native currency, you already know that it's being devalued. So over time, anything that's traded against a devalued native currency is going to go up. That's just basic macroeconomics. Real estate goes up because it's traded against native currency. Stocks goes up because it's traded against native currency. So if you're trading against native currency, the likelihood that over time is going to go up is substantial, especially if you hold the right asset.
Got it. Yeah.
Yeah. In addition to that, it's also a lot more deflationary, because what happens with T-shares, the longer we go on, T-shares become more and more expensive. They become harder to buy, right? And so, unlike putting your money in a T-bill, and when it comes out, you're getting your percentage, but that could be easily offset by what inflation is. So in the end, your yield might be nothing. With Hex, your yield is first going to be a lot higher when we're talking about staking, and we're talking about having T-shares, but they're also deflationary. They get more expensive over time. They're harder to accumulate, right? And the panel before us was talking about this, and so I don't want to rehash it too much, because people probably heard Axis and Sloth and Crypto Man and Crispy Man, and look, that was a great panel. But they're right. It's like, this is deflationary compared to anything you put or keep in the system of dollars, right? That's inflationary, and that's also in addition to inflationary, because they print more money, and then that creates also less buying power in the future for everybody. So Hex is the complete opposite. So if you wait out the instability or the volatility that worries people, and like you said, Frank, you do that by having a longer term mindset. Man, people come into crypto expecting they're going to get rich in a year or 2 years, or they're going to hit a meme coin and they're going to be done. They don't actually, not a lot of people don't actually take the time to learn what it means to become financially independent. And that is how you're going to become rich long term. And actually, it's better to take time to become rich, because sudden wealth syndrome is very challenging for a lot of people. If you aren't mentally ready, if you aren't in a place to be able to understand, hey, this is my plan when I become wealthy, or this is my plan when I can buy my time back and retire, then you're probably going to mess up, even if you become rich in a short time, or if you get lucky with a meme coin. In fact, I don't know if you know this, most people that win the lottery and win millions or billions of dollars, they end up going bankrupt, because they're not ready for that. They aren't stable. And so it takes more than just becoming financially independent. It takes becoming independent individually, and that's bettering yourself, physically, spiritually, mentally, whatever it is for you individually, but being ready for that next step of life, being ready for your financial future. And so that staking out, that sort of delayed gratification, also gives you the time to work on that growth, so you can be ready to achieve what you really want.
Well, Beans, speaking of what you said right there, that's exactly where I came to. Like, having that long-term perspective, right? A lot of us in America, we don't have the idea of being investors, right? The majority of Americans are, by the country, we're consumers, right? So you have to develop something like that, an investor mentality. You have to want more for yourself in order to get more, right? A lot of us, we don't have that, we don't have the guidance, right? We don't have the planning of a goal, of creating a goal of what to do when you retire. That was something I came into fruition with when I was wanting to retire. I was doing that because a lot of people in my space, they were leaving the job, and they didn't really know what to do after that. Some people just passed a few months after retiring, and I'm like, I can't have a life where I go through 30, 40 plus years of my life, and then I only enjoy the next 2, 3, 4, 5 because I've given my hard-earned, my great years early to them. But when you retire, there was still a lull, because I was so focused on the retirement part, I didn't think about the part after, right? And so a lot of us may come into that space where we do retire, we are able to leave our 9 to 5, but do we know how to budget? Do we know how to reinvest into other assets that may benefit us in the future outside of cryptocurrency? Learn about diversity. Like, there's a lot of things that Americans in general are just not aware of, and I was one of them. So I'm just speaking from my perspective. And like, we have to educate the people that are in the crypto space. Like what Richard Hart always says, no expectations, right? It's hard for people to stomach that whole idea. Like, not to expect nothing. I give you something and not expect anything. But I understood after I retired, and I created a business now where doing business coaching, because I own 2 brick and mortar businesses with my wife previously, and that's what I can get back. right? That's what I can do for people. I can help them in that space, subvert some of the mistakes I made and my wife made, give them some ideas of certain resources and organizations that can help you along your journey. And I believe Richard Hart did the same thing. You know, he made it to the end where he was financially straight, financially stable. He didn't have to create a cryptocurrency to actually, again, coin the term DeFi, really. I believe he set the whole DeFi trend in motion. And a lot of people are trying to piggyback off what he's doing. And it really just takes more than just the cryptocurrency he created, because a lot of individuals, a lot of programmers and founders, they're making cryptocurrencies, right? But the one thing that makes Hex different from what I've seen in any business is you have to have a community. And without a community, you don't have much. Because think about it, if we have a supermarket, right, full of food and items and goods, what is it without people in there? Just a store with food and no one's going to patronize you. But the connection he drew with us as individuals through his YouTube videos, through coming out to some of the meetups, like there's a connection of not just a founder that created something, but a person who cares about where you go in the future. And I got that from him. And I'm doing the same thing as him now. I'm giving back in my capacity, because when I speak to people I work with, it's not like, oh, I want another I need this for you to buy this from me. I'm selling you. I'm not selling people anymore. Like I never really was into that. That was something I didn't want to do. But I do want to give people valuable information that they deem valuable. And just like us, we find finances valuable. We find our future valuable. We're looking for the next thing. And this is a vehicle that's going to help us get there. So this is like, again, the community, what he's built, what he's inspired other builders to build. I think this is gonna really leapfrog soon once we finally figure out what's going on with the SEC case and stuff. That's just bringing more visibility to a positive community. Like you don't really get that often, with getting mainstream exposure to that, extent. So I think we're just in the right place at the right time. We were born at the right place, looking at the right place when it was time, and now we're all here to share, what we know, and again, promote it and be one of the loudest ones when it all comes to a head. And like you said, they first they doubt you, laugh at you, fight at you, and then you win. I think we're going through that whole trend right now where the fight is almost over, and with regulation coming in, I think it's just going to roll out the red carpet for the things that are doing well for the people, and so that's what I'm hoping for.
Yeah, you mentioned something actually very, very important there, because you mentioned community, right? But one of the things that I love to talk about is tying it back to what people can relate to. So, what is the equivalent of community in the real world, quote unquote, the real world, and what that's anything outside of crypto? When I go to Apple, right, how many times have you made the argument that, oh, Samsung, Android is better than Apple? I don't care what people argument they make, I'm buying Apple every single time, because I am a consumer of that product, because I believe in that product. I believe in the core principles of the product. I believe in which that product stands for, whether that's the simplicity of it, the fact that to me it's very efficient, it's not complicated, whatever the reason may be for what people are Apple believers. It's the same thing in community for crypto. People, the first wave of hexagons that came in, the community surrounded because they believed in the core principles of what Richard Hart taught. That was the community in which it was built upon, right? And now everybody needs to go back to those principles. But the original community was because of principles that Richard Hart taught. So going back to, well, why is the community important? Because they have something to believe in. They stand for something. They stand in principle. They stand in values. And when you tie back to what the community means, it's, are you willing to die on that hill for whatever it is that you're consuming? For some people, they'll never go to Samsung, they'll never go to Android because they want Apple. For some people, it's I'll never buy a Windows computer because I want an Apple MacBook. For some people, it's I'll never go to whatever because they believe in whatever product they're consuming for whatever reason. For us, for Hexicans, the people who understand what DeFi is, we're willing to die on that hill because we believe in the core principles. And I think it's important for people to understand why the community is so passionate about it. It's not because they're passionate because there's a bunch of sheep following each other around. No. It's because the principles in which the foundation was built upon are true values of DeFi. And only if you understand that will you appreciate the community in itself.
Great points. Come on, I want to ask you a question. So, Frank, you were talking a lot about, we believe in this and we would die on this hill, and 100% we would. How do we get other people how do we educate people on the difference between, I'll just say fake DeFi or like maybe not true DeFi and Hex? Because, there's a lot of falsehoods out there. There's a lot of FUD. There's a lot of lies. And there's just a lot of hate. And when people are territorial, when they follow one thing, sometimes it's hard to break through to them. Is there a way that we can teach about Hex and about true DeFi in a way that would maybe bring people in a way that we're not doing currently? Can you think of anything?
That's the golden question.
It is. I'm asking literally the most difficult question. I'm asking the most difficult question.
Yeah.
Look, you could say I don't know, but man,
I have my thoughts on it, and I really like that question.
Yeah, I mean, I like the question as well, and I think like you saw, I guess, during the conference last night, Richard, I guess, gave a shout out to the postcard contest, and he's always been a fan of like direct mail, and that's great. That gets eyeballs on it. That would bring someone, into probably website to where they could learn about it. So if all that is set up in just the correct fashion, like the funnel, if you will, if you're into like the marketing kind of thing, like you get, send out your info, you answer all the questions. Richard posted the entire list of like great things that, the target audience might be interested in, the questions that they might want answered. Why should they, click on this or, go to this website and learn more, all of that. Then you get them there. That's the start of it right there. Now I have my own thoughts on it, and I retweeted Sai, who's like a Hex OG this morning. I think that initiative in particular should wait until this stuff subsides, because the first thing that someone outside of the ecosystem is going to do is, aside from whatever funnel, the promotion sends them to, postcard, whatever you want to call it, piece of direct mail, what's everybody do? They Google it, and it's what's going to come up right now. And nothing, you'll have all sorts of informational stuff like that, but the headline risk is just too great right now. You got talk about watches and case dismissals and all that. Like, that's not what we're all about. Like, that needs time to sift through, in my opinion. So I hope whoever is in charge of that holds off a little bit on that until things clear, because I think that's a great idea. I think the actual concept is a great idea. They've actually, taken donations for it, so I'm happy to participate in that. But those are my just quick thoughts on that. And I think that, to answer your question, I think that's a great start to it. Like, that's what even the founder has wanted all along. And there were pieces of direct mail sent out early on, and of course you have like BTC maxis getting them and posting them and be like, the heck is this, trash, why am I getting this, it's a scam, but you know what, they got it, they posted about it, they're yelling about it. They're going to be the unreachables always. You're always going to have people who are unreachable, they don't want to be reached, but there are a lot of people out there that can be reached. And people, or excuse me, direct mail postcards. I think that's a great method to go for.
Okay. Well, I would like to say real quick,
Uh-oh.
from what my experience is, I think that the best way to get people involved in hex and cryptocurrency in this space of DeFi is to meet them where they are, right? We have to find the individuals who are already into finance, because you're not going to make someone who's really not financially literate,
Yeah.
or a person that sees a future with finance, like they don't understand 401ks and how they work and planning for their future. You may not be able to convince them as easy as someone who is investing in some way, shape, form, or fashion, whether it's real estate, stocks, or bonds, 401k. If you can have the conversation because they've done some of the work to understand what you're going to tell them moving forward. So it's just they have to be there already, and you just have to, like anything, expose them to it, because you don't know what you don't see. So.
Well, the good thing about this in particular, this initiative of the direct mail and or postcards, is you can target by zip code, very affluent zip codes, people who have access to money and manage money, or have someone manage their money, but at least the money is there to manage, and they probably have some disposable income. And if they're not into crypto already, and you're at least putting something in front of them to introduce them to it, then that's I'm all about that. So as long as it's targeted and you're not sending it to backwoods West Virginia, shout out to West Virginia, neighboring state, but yeah. I love West Virginia, but you know what I mean. So
Yeah, got you.
Target audience.
Those are great points, man. And from my experience, I'll tell you what it is. You can't convince someone unless they want to learn. Just be 100% being honest with you, because the only way you're going to go all in 80, 90%, 100% your portfolio into a 15-year stake is if you're in a situation where you're pissed off because you understand money's bullshit. Like that's the only way that I got to that point. Like where I was 15-year stakes, I left TradFi 100%. I went 99% in PulseX, and the rest of it in my 15-year stakes. The only reason why I went that way was because I was in a position where I hated TradFi and I hated fiat, because I discovered what it really was. And until you reach that moment of quote unquote enlightenment, you're never going to convince someone of like, oh, I'm telling you right here, because I've tried to do it. I've tried to go on and tell people like, don't do this bullshit. Go study why you shouldn't do this bullshit. And they don't listen, but because they're not in a position to listen. They don't want to learn, or they're not in a corner where they have to they make the decision, how do I escape this rat race? Because you're making money, you're saving money from your job or your business, and you're investing it. But when you would discover that businesses, real estate and stocks just appreciate because of debasement, and you're not really going anywhere, when you come to that realization that pisses you off, you're not going to look for alternatives. And I can say it's because that's how Michael Saylor went into Bitcoin. And until you have that moment of, I hate fiat for what it is and what it isn't, you're not going to be desperate enough to discover what the alternative road is. So you can try to evangelize and do all this, try to educate people, but unless they're in a position to receive it, because they're mad at what money is and what it isn't, they're not going to fully grasp it. I love the idea of like, go preach it and go expose it. And when the time comes, they're going to remember. I'm like, oh, I'm in a position now where I want to go discover what I do with my money. Because they did the research, they did all of the rabbit hole of the Federal Reserve, of the depegging of the gold standard and all this shit. And then they're going to be like, okay, well, what's my alternative? Bitcoin's already up 200,000. What's next? Oh, Pulse Chain, PulseX, and Hex. that could be the next thing, because that's actual DeFi. So they have to have that moment of like, okay, what is out there other than the basic bullshit real estate, stocks, and business, right? So the whole exposing, yes, expose as much as possible, because maybe it may be 5 years from now when they're like, okay, now I'm in a position to go learn about it. And then that's when they're going to remember Hex, and they're going to come back and be like, I received this postcard 3 years ago. Why didn't I look into it back then? And when they do, they're going to go all in on it. You know, that's just from my experience, man. I tried to tell people, like, don't go to, there's much better alternatives in 401k or Roth IRA. That, you know, there's DeFi and then there's Hex, but they're just not in a position to learn about it. So the people that you're going to get that are like that long-term, 15 years in, they're like, oh yeah, I'm dying this hill, are the people who are in that position. Like, they wanted to learn. They actually wanted to grasp the information, and they wanted to unplug themselves from the rat race of financial investing, you know, the traditional investing route. And the more exposure that we get out there, like, we think, oh, it's going to happen right away. No, it's a long-term play, because you may not see those effects until the next 5 years. And that's the whole mind shift that you have to go through, is like, when you deliver a postcard or when you talk about it for the first time, expect that that's going to take 5 years, 6 years, 7 years for them to finally grasp it the way that you grab it right now.
Yeah, look, you guys bring up so many good points. I mean, I don't know how much more I can add to that. The first thing I want to say is, come on, you talked about affluent zip codes. So I just want to give a shout out to everybody in LA who's struggling, you know, with these fires and everything, man. Like, look, a lot of those people lost insurance recently. And so, like, it's a tough place to be.
That's crazy.
And so, like, a lot of those people, some of those people don't even have insurance to get their house rebuilt because they were dropped. So I just want to give a shout out. I just want to realize, like, there's some tough times going out there for everybody. But when you have a long-term mindset, you know, it's like, okay, at least I have a plan. And, you know, I will say a couple of things before I talk about moving out and how I think there's two types of people. We have two different types of conversations: the people that are outside of crypto and the people that are already in crypto. And I think how we market to those people about true DeFi, it needs to be different, right? Because one probably already has a preconceived notion about Richard Hart and Hex, or two, they have no idea, but then they talk to people and then they might get a preconceived notion. But, you know, so first of all, you know, I kind of look at it like, as a Christian, like, when I go out and evangelize, when I go talk about my faith to someone, look, they might turn their back. They might not listen to me at all. But, like, I've had people reach out to me 3 years later, 5 years later, say, hey, you know, what you talked to me about, you know, like 3 years ago, that, like, I didn't know when then, but, like, those conversations changed my life. And Frank, that's kind of what you're talking about. It's like, hey, look, we're planting seeds about, you know, truth and how to sell yourself free with decentralized finance, with true DeFi, and with Hex. And, you know, sometimes what we don't necessarily get a yes right away. We don't necessarily get instant gratification, but that's what Hex is all about, right? That's why we're in Hex, is because we understand that we're playing a longer term game. You know, we have a whole financial future that we need to plan for. And so that's one thing, right? We need to let people understand that, look, instant gratification isn't a good thing. I know that's what we learn about in the society. That's what a lot of people try to shoot for, but it doesn't help you feel good. It doesn't help you learn, and it doesn't help you improve individually. What does is having, you know, a mindset of learning. And that's what you talk about, Frank. So, like, on one side, it's like, hey, this is DeFi, and this is why you want to get into it. On the other side, like, look, I live in Miami. I go to crypto conferences. I go to crypto meetups at times. And when I talk to people about Hex and Pulse Chain, like, yeah, sometimes they get laughed at because they don't understand the truth about the platform or Richard Hart. And then I start asking questions, and they literally have no idea what they're talking about. And so it's literally just this, like, and I ask questions like, okay, do you listen to legacy media? Okay. Do you do this? And a lot of times, like, no. I'm like, why? And then I'm like, this sounds exactly like why you don't like Hex, or why you don't like Pulse Chain, or why you don't like Richard Hart, just because of what you've been fed in headlines. So it doesn't feel to me like you have done your true research on this project. And so I feel like when it comes to people in crypto, I want to challenge them a little bit. I want to challenge them to take a deeper dive, to be like, look, I don't think you've truthfully done your research. I think you're just reading headlines and coming to a conclusion that maybe is valid and maybe isn't, but you need to find that out for yourself. And so like, those are the conversations that are really challenging for me, but in some cases have been the most rewarding, and I like when people challenge me. I don't like it in the moment. I don't like when people put me on the spot, but sometimes those difficult conversations are the best way to break people out of their like small mindset, at least for me personally, when it comes to crypto. So I'm kind of looking at two different sides and two different ways to bring people into Hex and bring people into true DeFi. But it takes work, and it takes each and every one of us. Look, just talk to people about it. Find a small look. I'm in sales. I teach sales management. I'm a national sales manager for a company. It's literally I talk to people for a living. I teach for a living. And what I tell people is, look, you need a 2 to 3 minute elevator speech. Okay, you need one about Hex. What is Hex? Why do you love it? You need another elevator speech about DeFi. What is decentralized finance, and why is it important? And it needs to be quick hitting points so you can get literally to the meat and potatoes of each of these conversations individually. So if you have 5 2-minute elevator speeches on the most important topics, you're going to be much more efficient about what you want to tell to people. And because you're more efficient, you're going to get more people's interest because you're not all over the place. There's so much to talk about Hex. We get excited. And unless you really dial down and have that elevator pitch ready and on point, like, it's hard, man. It's really hard to get, especially people that are in crypto already.
Yeah, that's a fact. That's a fact. Like he says, like a litmus test. You find out who's really doing the research and who's parroting things they hear. So that's kind of what we got to fight with right now, And again, that's something I always talk about too, just about retiring and leaving. Wouldn't it be easier to retire in 5, 10, 15 years than to the standard 30 of what we already have in mind? You know what I'm saying? Like, if that's not a sell right there, if that's not a way to start looking into something different, an asset class that's brand new to the whole world, and you just happen to be born in a time where you can look into it, do the research, it's online, it's for everyone to see. I mean, what more do you want?
Yeah. Corey, like a DJ Roundtable, the thing that we do is we sign off every show saying we know that time is your most valuable asset, and we appreciate that you spent your time with us, right? Like, how can we buy more of our time back if we don't, have a plan for our financial future, right? Like that's literally what you're saying in a nutshell.
Right. Yeah. That's my last song is about ultimate flex. My time is the ultimate flex right now. Like, the money is really not it. It's your time,
Money can't buy happiness, but it can buy a boat.
Yes, okay. Are you okay?
Good song.
Yeah. Nice.
It can buy me a boat.
Yeah, you go. So we got a few minutes. Any last thoughts? Kevin, you want to go first? Last thoughts here?
Oh, put me on the spot. Frankie, man, let's hear from you.
I just say, hey, man, I hope people get inspired to get curious and go dig down the rabbit hole like we all done. I think that's the first step for anybody to get financial freedom over a long-term perspective, is they get the curiosity to learn. And I hope this conversation inspires and motivates people to just go learn. Not surface level, not Google, but actually go dig down deep, like actually learn what money is, what it isn't, and then tie it back to Hex. That's the only thing I can say.
Yeah. I mean, why are we in our 5th year of this conference? Like, this is a crypto. This is like to Corey's point, it's community. And it's believe it or not, it's a growing community because you have a bunch of OGs. Yeah, we've lost some along the way. But, look at all the new faces at this conference. Mm-hmm. And, people who I've had yet to been on stream with. How cool is that? So it's, we're growing and more people are, being reached. So that's, that says something in itself. And the other thing I see Maddie right over there. How you doing, Maddie? I wanted to bring up was T-Shares they're not getting cheaper. So that's, it's almost like a little urgency kind of thing there too. Because I remember, in the early days of the adoption amplifier, I mean, we started at like 10,000 hex per T-share. We're close to 40,000 hex per T-share now. And, that sweet, hex per T-share is going up. So I mean, it was like what 6 point something a year or two ago, and now we're usually well over 7 per day. So it's just little things like that. That's just like, man, it's a sticky system if the people get into it.
And the easiest way to be a T-share whale is to stake long. The earlier you get into staking 5555, the better chance you have to be a whale when those come to fruition. A T-share whale.
Well, speaking of going long, you guys set me up perfectly for our next speaker, who will be discussing longevity.
I see what you did there.
All right. I see what you did there, Matt.
Maddie, thank you so much, brother. I'm going to hop back over to the DGen Roundtable stream. Cabana, Corey, Frank, this was awesome. Honestly, I think it was a great conversation. Thank you all.
Awesome.
Yeah, good stuff, man.
Yeah, you
I want to say one thing real quick.
Yeah.
I just want to say before we leave, man, if anybody wants more in their life, they have to take a risk, have to take a chance. Listen, a boat is safe in the harbor, but that's not what it was built for. That's it.
Amen, brother.
Awesome.
Couldn't agree more.
Well, you guys hit it off and had a great discussion. So thanks for being on here. And I encourage everybody to follow you guys on social media. And thank you again for being on the conference. We'll have a 45-second musical interlude, and then Aubrey will be on screen. So thanks, guys.
Shout out, Aubrey.
Later.
Maddie,
Thanks, everybody.
thank you for having us, and thanks for everything you do.
My pleasure. Peace.
All right.
Insane staking on the East End Post. We on 2 chains. How the coins didn't fit. What was I supposed to do? Not stake and stay broke with you? Shit. Bought Hex for 4 years. Trying to DCA. Got post chain, post sec. Trying to DCA. Now the world gon' see. Rich already changed the game. Which is why the hell you see me DCA it in the post chain. Bought Hex for 4 years. Trying to DCA. Got post chain, post sec. Trying to DCA. Now the world gon' see. Things will never be the same. Ever since we launched our own thing on our own chain. Bought Hex for 4 years. Trying to DCA. Got post chain, post sec. Trying to DCA. Now the world gon' see. Rich already changed the game, which is why the hell you see me DCA it in the post chain. Bought Hex for 4 years. Trying to DCA. Got post chain, post sec. Trying to DCA. Now the world gon' see. Things will never be the same. Ever since we launched our own thing on our own chain. You other Sammy Chicas need to get your crypto coffee till we up and out of ditches, so you go from rags to bitches.
All right.
Hey, Aubrey.
Hello there. Great to see you, Matty. Thank you so much for having me back.
Yeah, I want to thank you so much for coming to speak again. The Hexakin community loves you, and people have already given $27.5 million your way, and I hope people will continue to donate more crypto. And you and I have set up a way for people to send anything on Pulse your way. So I will drop the link in the description or in the live chat now for people to link to your tweet where you've described how people can donate.
Thank you so much. And yes, I will be reminding people of that towards the end of the talk as well. I also see, I assume everyone else also sees that you've put a donate link, levf.org/donate, the regular link at the top of the page. So I assume everyone's been seeing that all day.
That's right.
So that was extremely kind of you.
Yeah.
I really want to thank you so much, Matty, for all you've done to support this work that we do and to support the Hexicans interested in helping. Right. So yes, I will be delighted to spend the next hour doing this. I'll try and leave a bit of time towards the end for questions. I don't know whether there's anything that I don't have a view of the public chat here, so I think you may have to read them out if we get to that. But we'll worry about that.
Sure. Yeah.
We'll worry about that later on.
I'll let you take it away. Thanks.
All right. So first of all, how do I actually make these? Here we go. There we go. Fine. Done it. All right. So what I'm going to do today, since Matty's been so kind as to give me a whole hour, is I'm going to give, first of all, a fair amount of background, at least 10 or so minutes, for those of you who are unfamiliar with the work that I do. I've been involved in this field for a very long time now, 25, 30 years. And much of, in fact, nearly all of what I do is based on some concepts that I first started putting forward 20 years ago, at least. And so those of you who are familiar with my work will not learn very much for the first 10 minutes of what I have to say. Then after that, I'm going to be talking about the work that I and my colleagues have been doing over the past couple of years, which was enabled by your donations. Not all the money for that work came from the 2021 Pulse Chain airdrop, but a lot of it did. So I'll be helping you to understand what I did with that money and why it's so important. I'm very proud of what has happened over the past 2 years in that regard. And then I'm going to talk, as much as I can anyway, about what we want to do next. Of course, the plans that we have are constantly evolving, but I very much feel that now is the time to be launching this research program into its next phase. So I'll talk about that as well. All right, so those of you who do know my talks will be very familiar with this slide, which is where I always start. And I start here because this is a question at the bottom that is hardly ever asked. And that's a real problem. People just don't really fix very much on the paradox that the health problems we experience late in life have been so much more difficult for medicine to solve than the problems we have early in life. To give you some numbers, in case you don't know them, 200 years ago, before the advent of modern medicine, before people like Edward Jenner and Louis Pasteur, more than 1/3 of babies would die before the age of 1, even in the wealthiest countries in the world. And all it took to pretty much entirely eliminate that was the realization that hygiene is quite a good idea and the development of really elementary medicines like vaccines and antibiotics that, completely got rid of all deaths in early life from the main causes that used to be so prevalent, like tuberculosis and diphtheria and so on. And, this is, of course, a huge achievement, but what it did was it has allowed, of course, everybody, almost everybody, to live long enough to get sick from the health problems of late life. And sure enough, it has turned out that the health problems of late life appear to be much more challenging for medicine to do anything about. So the first question we have to ask ourselves is, what's the difference between these two types of disease? Now, most people think that the reason why most people don't ask themselves this question is just that they think they already know the answer. They think this is the answer. So before anyone gets confused, you're not supposed to be able to read this slide. The whole point here is that there's just so many things that go wrong with us late in life. And of course, they go wrong at more or less the same time. So that means that they interact and they exacerbate each other. So the assumption that everybody has, pretty much everybody, is that it's just complexity. It's just that this complexity overwhelms the medical enterprise, and we just haven't figured out how to take it apart and to treat each of these things. Now, that is indeed part of the answer, but it turns out it's not the main part of the answer. The main answer is something completely different. And in order to introduce that, I'm going to briefly digress into a different question. This question here: in what ways can somebody be sick? That's a sensible question. And, you can ask people this question. And if you do, almost everybody will give an answer that is pretty much represented by what you're seeing on this table here. Most people will say, well, let's see, there are infections. In other words, communicable diseases. That's column 1. Then there's genetic diseases, things that a small proportion of us are unlucky enough to inherit from our parents. That's column 2. Then there's the big one, the chronic progressive conditions, diseases of late life. Excuse me, like Alzheimer's and almost all cancers, and atherosclerosis and osteoporosis and all the things that I put up in very small font a couple of slides ago. Now, then, however, people know that, health declines in the absence of any of those things late in life, and they throw the reasons why that happens into this other bucket that they call aging itself on the 4th column. And this consists of these rather poorly defined things like, frailty. It consists of basically, you don't actually have any diseases by, any strict definition of the term disease, but you still can't keep up with your granddaughter on the dance floor. And so people think this. People think in particular that 4th column is massively different. It's just like completely not a disease. That's what I'm denoting by that big thick black line between column 3 and column 4. All right, so the problem is that that's actually incorrect, and I'll be explaining why in a second. The reason the first thing I'm going to do before I explain is to tell you what aging is. Now, first of all, you may think, wait, what? I already know what aging is. And I'm sure you do. And I'm sure that everybody else does as well. But the thing is, if you actually ask people to spell out in words what aging is, everyone gives different answers. It's insane. I mean, aging has been the #1 preoccupation of the human race since the beginning of civilization. And yet, we can't really agree what it is. So I'm giving you here a definition of aging that I'm going to be sticking to for the rest of this talk. And I believe it's a really good definition, one that you should stick to too. The reason it's good is not just because it's correct. Most of the definitions that most people give are fairly correct. The main thing is here that it demystifies aging. It explains to you that aging is not actually a mystery. It's not some enigma that we don't understand. Aging is simply the combination of the 2 processes that you see written down here at the bottom. A process that goes on throughout life, whereby metabolism, in other words, the network of processes that keeps us alive from one day to the next, generates damage. Now, what is damage? Damage is simply changes to the molecular and cellular structure and composition of the body. But they're not any old changes. They are changes that the body can't tolerate an indefinite amount of. It can tolerate a certain amount, but not an unbounded amount. And that's why we have this right-hand process that only happens late in life. When the amount of damage that metabolism has created exceeds what the body is built to tolerate, then bad things start to happen. Our function starts to decline, both mental function and physical function. And that's what I'm calling the pathologies of late life. That's all aging is. It's just a combination of those 2 processes, the accumulation of damage throughout life, which eventually kicks off the decline in health in late life. Now, if you think about this, that's actually a definition that I could also have used for the aging of a simple man-made machine, like a car, right? What a car does, it has function. The engine runs and so on. And damage accumulates, like the oil accumulates contaminants, or you get rust or whatever. And that's fine for a while, which is why you only have to take your car in for servicing after a few years. But eventually, if you just don't do anything, the doors fall off and such like. And that's that's the pathology of a car. All right, so with that in mind, let me go back to the table that I showed you 2 slides ago. If you look at this table, you'll see that the columns are exactly the same as before. They've got infections, they've got genetic things, they've got the diseases of late life, and they've got aging itself. But this time I have moved the big thick black line. So why is that so important? Well, 2 reasons. First reason is this tells you the answer to the question that I began the talk with. This tells you why we should not be surprised that the health problems of late life, column 3, are not amenable to the same kind of medicine that works so well for column 1. They're just completely different things. But also, this tells you by moving the black line that column 3 is basically indistinguishable from column 4. There is no meaningful biological difference between them. The only difference is semantic. The things in column 3 are the aspects of aging that we've chosen to give disease-like names to, and the ones in column 4 are the ones we haven't, and that is all. Now, that's an extraordinarily important thing to bear in mind, because what it tells you is that, for practical purposes, aging is a disease, that the things in column 4 are just as disease-like as things in column 3. If I had my way, I would not call either of them diseases. I would use the word disease only for things in column 1 and 2. But, you know, that ship has sailed. Column 3 definitely constitutes diseases. So, you know, just let's remember that they're not different from the things in column 4. All right, why is that so important? It's important because it allows us to understand why we have been so unsuccessful in developing new ways to address the problems of aging. If you get that wrong, that thing I just said, if you put the black line in the wrong place and you think of the diseases of late life as if they were infections, what you're going to do is geriatric medicine, which is what, of course, overwhelmingly we do these days. We wait for people to get sick, and then we try and cure the sicknesses that they have, completely ignoring the fact that those pathologies are self-inflicted, that they have come about not because of any external agent, but because of the accumulating damage generated by being alive in the first place. And so, you know, geriatric medicine is a mug's game. It's never going to work. Apart from anything else, just looking at this very simple diagram, you can see immediately that, you know, what geriatric medicine is trying to do is to attack the consequences of something that's accumulating, which means that pretty much by definition, it's going to become progressively less effective as the person gets older and has more and more damage. It's a mug's game. Now, I'm actually not the first person to have noticed this. More than a century ago, a few people started to realize everything I've told you so far. And they said, well, wait, okay, this isn't going to work. We've got to be more preventative. And we can be, because let's think about what the goal is here. The goal is to stop people from getting sick when they get old. And that simply means separating metabolism from pathology. So what geriatric medicine is trying to do is to separate metabolism from pathology by separating damage from pathology. And it's not going to work. But you could equally do it by separating metabolism from damage. And so the whole field of gerontology was born early in the 20th century when people started to think that way. And they said to themselves, well, look, we ought to be able to do this really, because let's face it, in the living world, there's this huge variation in how rapidly organisms age. Some species age far more slowly than others. So maybe we should just study that and figure out why, and maybe we'll be able to use that information to figure out how to make human beings generate damage more slowly than they naturally do. Seems like a great idea, and certainly people pursued it rather hard for quite a long time. But unfortunately, eventually they realized that they were up against this. Now, of course, most of you have written software or do write software for a living. And so you can immediately look at this and you know what I'm going to say. This is the ultimate nightmare of uncommented spaghetti code, right? There's absolutely no way on God's earth that one's going to be able to unpick this and, you know, stop metabolism from doing the thing we don't want it to do, the creation of damage, without at the same time having unintended consequences and stopping it from doing the things we need it to do to keep us alive. It's just not going to happen. And of course, I'm understating the problem here because I'm showing you here a simplified diagram of a small subset of what we know about how the body works. If you had an unsimplified diagram of the whole of what we know, it wouldn't fit on the slide. I'm telling you that. And of course, even that's an understatement because it ignores all the stuff that we don't know about how metabolism works, which is far bigger than what we do know, and even ignoring all the stuff that we don't even know that we don't know. So forget it. But luckily, there's a third approach. By about the 1960s, 1970s, people who were working on gerontology had pretty much agreed what I have just told you. They said, "Okay, this is not going to happen." And if you were writing a grant application in this field back then, you couldn't even mention the idea of doing anything about aging. You could only mention it as something that one might study. It was a bit like, seismologists. They know that the thing they study is bad for you, but they don't have any aspiration to stopping that thing from happening. It's just, trying to figure out how to get out of the way. So it's the same thing. So this was true until the year 2000, when I had been in the field for a few years and I realized what everybody was missing. I realized that in order to separate metabolism from pathology, you don't need to separate metabolism from damage or to separate damage from pathology. Instead, you can separate the two processes from each other by periodically going in and repairing, eliminating the damage. So this is simply preventative maintenance. It's just like, it's so obvious, it's such common sense that this is what you can do. And by doing so, you can sidestep everything that we don't know about how the body works. You don't need to know much about how metabolism generates damage or to stop it from doing so, because even if you let metabolism generate damage at the normal rate, if you're repairing it, it won't get to the point that kicks off the right-hand process. And that, of course, means that you also don't need to understand the details of the right-hand process of how damage generates pathology. From an engineering perspective, this is obvious. From a basic science perspective, it made no sense at all to pretty much anybody for several years, but eventually I got the message across. This is why I call it common sense, going back to simple man-made machines. So here we have obviously a car that's more than 100 years old. The key thing is, it did not get that way by being built to last 100 years. This car was probably built to last 10 or 15 years at the maximum. And yet, here it is. It's doing just as well as the day it was built, purely because it had an unusually comprehensive amount of preventative maintenance throughout its life. That's all it is. So, of course, in order for the preventative maintenance approach to be actually implemented, one needs to drill down and describe it in concrete terms. And that means two things. Number one, it means describing what the damage actually is, what this stuff that is being generated by metabolism and that eventually causes us to get sick actually consists of at the molecular and cellular level. And that is the left-hand side of this table. And then secondly, one has to figure out how to do the actual damage repair, how to eliminate these various types of damage. And that's, of course, the right-hand side. So I'm not going to go through the whole of this right now, but I'll just, for illustration, mention the top row, cell loss. What is that? That's simply cells dying and not being automatically replaced by the division of other cells. All right, seems reasonable. The number of cells goes down. Eventually, there are not enough cells to do the job that that particular type of cell was doing, so you get sick. Parkinson's disease is a fine example of that kind of thing. There's a particular type of neuron, dopaminergic neurons, that die rather rapidly, and that's why you get Parkinson's. Excuse me. Now, of course, the natural answer is put back the cells. All you need to do is restore the number of cells, and of course, that's what stem cell therapy is all about. And sure enough, it works. It didn't work very well the first time it was tried, but that was 30 years ago. Now we know a lot about stem cell biology. And so half a dozen clinical trials are ongoing right now doing this against Parkinson's disease, and everyone's very optimistic. That's just for illustration. I could go through the rest, but in the interest of time, I won't do it now. Now, I mentioned that this was a very heterodox idea when I first put it forward, and it certainly was. It took me several years to get people to take this seriously. I suppose that's true for most paradigm shifts, and actually I'm fairly pleased at how few years it took. But anyway, the fact is it did actually, win people over eventually, with the result that more than a decade after I put this forward, it was essentially restated, albeit not terribly accurately, by a group of other scientists who were much more, credentialed than me, and perhaps they had better graphics. And the result was a paper that came out in 2013, which is now by far, by a huge distance, the most highly cited paper in the whole of the biology of aging this century, and it's almost certainly going to stay that way. So, I guess I could argue that I should have got more of the credit, but what matters to me, of course, is that I don't have to spend my time justifying this damage repair approach to my colleagues anymore. This is totally mainstream now. And the good news is that progress has been made. Not only are we pushing forward with the various things that I showed you on the right-hand side of the table a couple of slides ago, but also to the extent that we might still wish, that these things were easier to implement, alternatives are being found, different ways to eliminate the same types of damage. For example, many of you may have heard of something called partial reprogramming, which derives from a really important discovery made in the mid-2000s in Japan. Essentially, what we can do here is, instead of doing stem cell therapy, actually transplanting cells that are in a stem-like state, instead of that, we can inject chemicals or proteins that will transform cells that are already present in the body into a more stem-like state. We have to be very careful to do that because you can take it too far, but it's also very promising and it's getting a lot of funding from a lot of people right now. That's just one example. And again, I could go through the rest, but in the interest of time, I won't do that now. All right, so I said I was going to talk about what we do at LEV Foundation, what we've been doing with your money, and that starts now. As you can see, the damage repair approach, the maintenance approach, is a divide and conquer approach. That means that we have to develop different individual interventions to repair different types of damage, and then we have to apply them all to the same individual at the same time, so as to repair all the types of damage. If you only repair half of the types of damage, it's not going to really benefit the individual very much because, the other things are going to be proceeding and you're going to pretty much have everyone die on schedule just from a narrower range of causes. So that's not good. We've got to do them all. And so that's why over the past nearly 20 years, I've been pursuing research that developed these repair approaches. And especially I've been focusing on the most difficult ones, the ones that other people were unable to get funding to do or whatever, simply because they were too challenging. They couldn't lead to, high profile publications every 10 minutes. And so, something had to be done. So I did it. I was able to attract enough philanthropic funding to make very substantial progress in several of these areas. But in parallel with that, other people were working on the low-hanging fruit, the stuff that was relatively easy. And that also made good progress, with the result that as of maybe 3 or 4 years ago, we were in a position where it was possible to start on phase 2. In other words, combining things that already work individually to some extent and making them work in combination. At the beginning of this period, I actually started a kind of beta test, so to speak, of this combination rejuvenation at Sense Research Foundation shortly before I was ousted. But things have gone rather better since then because thanks, as I say, to the donations that we were able to retrieve from Sense Research Foundation, thanks to the courageous litigation that went on 2.5 years ago, almost 2 years ago, early 2023, I was able to start this experiment. I took 4 very different interventions, which you can see listed there, and gave them all to a whole bunch of mice. We started with 1,000 mice because we wanted to supply these interventions in a variety of different subsets, so as to learn as much as we could about how they would interact, whether they worked, whether they would cancel each other out, which is certainly possible. And in particular, we started these interventions when the mice were already in middle age. So normal mice of a nice strain that's used for lifespan experiments typically live about 2.5 years on average. And we didn't do anything for these mice until they were already 1.5 years old. In fact, we bought them from a supplier when they were already 1.5 years old. And so they had 1 year to live. And our goal is something that I have called robust mouse rejuvenation. That's what RMR stands for. So the goal is, the definition of RMR that I have given is simply to double that year, to give these mice an additional 12 months of extra life. That would be pretty cool because it's 3 times as much as we can do so far. And I'll come back to that in due course. And one thing that's very important to emphasize, in case anyone's unclear about this, is that the extension of life will be extension of healthy life. These mice are in middle age, so they don't have long to live, but they have long enough to live that they're not yet sick. These mice are essentially healthy still. And so the idea is to keep them healthy, not to let them get sick and then keep them alive in a sick state. And we are measuring all manner of different aspects of their health, as well as, of course, keeping them alive and seeing how long they live. All right, so I said it was a complicated experiment. There's 2 sexes, of course. We've got 500 male mice, 500 female mice, and we're splitting each of those 500s into 10 treatment groups. Obviously, we have a group that's getting all 4 of these interventions. We have a group that's getting none of them. We also have 4 groups, each of which is getting just one of the interventions, so as to validate that we're doing the work in accordance with what was done in other people's hands in other experiments in the literature. And we are also, as I mentioned, looking for the possibility that interventions might cancel each other out. And the way we do that is by simply having 4 groups, each of which gets all but one of the interventions. All right, so then in terms of health, a lot of this can be addressed simply when the mice die. You can ask what they died of. And we are doing that by storing and preserving a whole bunch of tissues, which we haven't yet analyzed. But most of the health assessments are done while the mice are still alive. And we do it throughout the period of the experiment at various time points defined by how many of the mice are still alive. So we start out in each treatment group with 50 mice. The first time point when we do these tests of health is at the point where 10 of those mice have died, and so on. So it's different actual chronological ages depending on how well the mice are doing, but it teaches us more than if we just did everything at the exact same chronological age across all the treatment groups. All right. So I said we were doing a lot of health measures. What kind of health measures? Well, one kind is we can just look at the mice. We can see how much they weigh. We can see how much fur they are losing. Mice lose fur throughout their life. We can look at their spine. They get curvature of the spine. That's called kyphosis. Excuse me. These are important measures of health, but we can also look at how they behave. You can measure memory. You can measure blindness. You can measure deafness. You can also measure physiological things like grip strength and endurance, lots of things like that. We also take blood samples so as to measure things like glucose tolerance. And when the mice die, or in fact, we actually kill some of the mice on purpose, we isolate, as I mentioned earlier, a lot of tissues for future analysis. So we can find out really absolutely everything about which aspects of the mouse, of each mouse, were going downhill first and which ones were going downhill later. I have this slide just to talk to scientists, if there are any scientists in the audience, because this business about analyzing tissues is something that we absolutely need collaborators for. Different tissues have very different assays for measuring how healthy they are, and different people have different expertise, so collaboration is the way to go. All right, so Cutting to the chase, though, the actual acid test of how long the mice live, I thought I would show you the data. Now, there are a few mice still left. I think at this point there's just 4 mice left out of the 1,000 that we started with in February of 2023, I'm sorry. And so that's pretty much what we were hoping for, that we would be able to have our mice live, the control mice, roughly to an extra year, so 2.5 years. And then the other mice, the treated mice, might live longer. So first of all, let's look at the female mice. If you look at the the vertical axis, the y-axis, you'll see percentages there. So at the beginning of the experiment, all the mice are alive. That's 100%, and that gradually goes down. Every step that a curve takes is a mouse dying. And we started out, as I mentioned, with 50 mice in each group, more or less. So the thick blue line is the mice that were not getting any of our 4 interventions. And as you can see, they died youngest. And the thick red line is the group that were getting all 4 of the interventions. And brilliantly, they lasted the longest. And they lasted about 4 months longer than the mice, the thick blue line, which is, of course, as I mentioned, roughly what we could already do much more simply. I'll come back to why that's not such a disappointment. The lines in the middle, of course, show the groups that are getting some but not all of the interventions. And sure enough, they're in the middle. So they get some but not all of the benefit. So this is pretty much what we hoped for. Of course, in an ideal world, we would have hoped that we could extend the mouse's lifespan by, 8 months rather than 4 months. We didn't do that, but we believe that we have a very good chance of doing that next time or the time after that, because not only of what we've learned, but also of the way that we're going to refine the design of the experiment. And I'll be talking about that in due course. Now, the male mice, it was a good deal more complicated. If you look closely here, you will see that the thick blue line is in the middle of the pack, so to speak. And we still have to do a bunch of work to understand why some of the treated mice did worse than the controls in males, even though they were fine in females. But we're not over-interpreting this. We believe that there will be technical answers to this that do not actually mean that the treatments are bad for you if you're male. It's more complicated than that. So RMR2, in other words, the next experiment, what are we going to do? Well, one really unimaginative approach would be just to do the same 4 things, but at different doses than we did in version 1. And, that's a sensible thing to do. It would teach us stuff because we really don't know whether we're using the best dose. But it wouldn't teach us nearly as much as we could if we used different interventions. For that same reason, we didn't want to wait until now to get RMR2 going. We wanted to start it a year ago. But we couldn't because we didn't have the funding, and I'll come back to that. So therefore, it really makes sense to get going now, as soon as we possibly can. So here are the things that we're going to do. Some of you may have heard of some of these things. The one on the second line, inducible OSK, that is the thing I mentioned earlier called partial reprogramming. MSCs are mesenchymal stem cells. These are cells that are very rejuvenative in lots of ways, and they seem to create something called an exosome. They secrete these little bags of stuff that are absorbed by other cells. Another alternative is to put the exosomes in directly, and we're looking at that. We may also use a bunch of compounds that have recently been shown to have benefits on mouse lifespan. And we're still deciding the exact details, but these are the kinds of things we want to do. Now, you may notice that there are more than 4 things in the current choice list. And that's on purpose, because we want to ramp up. We have one of the conclusions that we have made from the current experiment is that 4 wasn't enough, that we want to do 7 or 8 this time in order to really hit all the bases. So that there's no type of damage that the mouse is accumulating whose accumulation is not slowed down or reversed by the intervention. We're also going to make things harder for ourselves by having a better baseline. Rapamycin is one of the compounds we used in this first experiment, and it just obviously works. It works in everybody's hands. It works for us too. So we've decided we're just going to give everybody rapamycin next time round. And maybe also another compound that's got very good track record called acarbose, which has been shown to synergize with rapamycin rather well. Also exercise, which is another thing that seems to help. So I'm going to spend the last, I guess, 5 or 10 minutes of my remarks before I let people ask questions, talking about why I'm doing this and why you should care and how you can help and all that. What's so important about these studies? You know, everyone else, there's lots of people doing very valuable studies of other types all around the world. I have always been focused on doing the things that make the most impact, that make the most difference. And what does that mean? It means making the most difference to the whole world. This phrase, I'm a humanitarian, first and foremost, we actually have that written on the front page of our website. It's something that, you know, really defines me. And that means that I want us to achieve longevity escape velocity, the elimination of aging for everybody as soon as possible. How do we do that? Well, honestly, we pretty much found out what we should aim for 5 years ago now, when COVID happened. The world mobilized. The world actually paid attention to something for once, and a huge amount was done. There was a proper war on COVID. And, you know, people withstood and tolerated a substantial diminution in their quality of life just in order to bring that thing under control. What I want is a war on aging that's like that. In fact, bigger than that. I want a war on aging that will dwarf that because, of course, you know, COVID wasn't terribly harmful to young people, whereas, well, I mean, I guess aging isn't terribly harmful to young people at first, but the fact is everyone's got it, and, you know, doing something about it is difficult. So the thing is, you know, is this just a complete pipe dream? Is there any conceivable way that we could trigger you know, something that big against aging so soon, anytime soon? Despite the fact that, you know, I've been trying to trigger it for 25 years and other people before me have been trying, and the world continues to be just so totally apathetic about it. Well, you know what? I think we can. And this is the answer to the question at the top, why these RMR studies are my #1 focus. It all comes down to this. Who listens to whom? This is what it's all about. Because at the end of the day, we're going to have a global war on aging only if governments around the world decide to wage that war. So why would they do that? Who do governments listen to? Well, of course, most governments are democracies, which means they listen to their electorate. They listen to their electorate and nobody else, because at the end of the day, they only have one goal in life, which is to get re-elected. So at the end of the day, if the public wants a war on aging, we'll get a war on aging. So then we have to ask, how can we make the public want a war on aging? This is the fundamental problem that you know, people working on the longevity crusade have, that no other crusade has, is that the people who actually suffer from the thing that they're trying to fix don't complain enough. The elderly just don't complain enough. So we have to fix that. We have to fix the apathy of the public. How do we do that? Well, there's only one group of people that the public en masse actually listen to, and that is influencers. You know, Oprah Winfrey, Joe Rogan, Mr. Beast, people like that. You know, you may say, well, okay, do the public listen to influencers? Well, of course they do. They wouldn't be called influencers otherwise, right? Of course they do. Influencers actually do influence public opinion and public aspirations and desires. So I believe that if we can get the world's influencers to mobilize and actually call for a war on aging, we'll have a war on aging the following week. Honestly, we will. So then we have to ask the next question. Who do influencers listen to? Well, the fact is, if you're an influencer, you want to stay an influencer, right? How do you do that? You have to withstand the hating. You know, anyone who tries to, you know, influence public opinion, they get a lot of people who don't like what they're trying to say. You know, haters are everywhere. They're going to hate. So you've got to withstand that. And the way that influencers who succeed and who stay influential, the way they do it is by being right. And the way they get to be right is by listening to expert opinion, the expert consensus in the area that they have chosen to pontificate about. So, what comes next? Who do the experts listen to? Now, you might think the experts wouldn't listen to anybody because they're experts. They just get on and know their shit. But unfortunately, that's not true. I only don't listen really to other experts in that sense. I don't decide what I'm going to say on the basis of what other people are going to approve of. But basically, all my colleagues do. And the reason they do is because they get most of their money not from people like you, from philanthropy, but from grant applications to the government. And those grant applications are adjudicated by other experts through this utterly catastrophic system called peer review, which means that experts have to listen to each other. They have to follow the herd. They have to not step out of line and say things that can be characterized as irresponsible. So, how do we change what experts say to influencers and to other people when they are so scared of stepping out of line from the herd? Well, I have an advantage here, which is that I've been an expert for long enough that I'm good friends with all the other experts in the biology of aging. And I know exactly how they think and exactly what they need to feel that they have permission to say more than they currently do. Here's something that experts don't tell you, and they don't tell anybody, because if they did, people would stop giving them money. There is a way already, as I mentioned, to get middle-aged mice to live 4 months longer than they normally would. Great. Unfortunately, it's a really, really easy thing. All you have to do is starve them. You give them not much food, and they live 4 months longer. Furthermore, we can do that with drugs. This drug I mentioned earlier called rapamycin works in more or less that way. You can also do it genetically by messing around with the genes of the parents of the mice in question, which of course is not something that we're doing in our experiments because we want to do things that are relevant to people who are already alive. Problem is that calorie restriction doesn't scale. It gives mice a bit of extra life. If you start calorie restriction early in life, it can give people, it can give them maybe a year of extra life. If you start in middle age, it'll give them, as I say, about 4 months. So if you think about what that means for humans, that means really rather a lot. That means like 15 years or something, or at least 10 years. And, you know, that'd be quite nice. But unfortunately, longer-lived species benefit a lot less from calorie restriction than short-lived species do, a lot less. I've put up there that this won't give us any more than 5 years. In fact, that is an extremely conservative statement. If you're starting in middle age, like when the human is 55, 60, then it would be a big surprise if calorie restriction gave more than 1 year. So it is just, it's not the Holy Grail. But you wouldn't know that to listen to my colleagues. In fact, I was so pissed off 20 years ago when I realized how much this was being swept under the carpet that I actually wrote a whole paper about it. You can probably find it. It's called something like The Unfortunate Influence of the Weather, because it's all about the evolutionary basis for why CR doesn't scale. So this is the thing. We have not beaten that. 50 years ago, we already knew that we could extend mouse longevity starting in middle age by 4 months. And we still can't beat that 4 months. Furthermore, it's not just mice. Other species are just the same. So this is terrible. It's appalling. But it's not appalling for us, for me, and for these RMR experiments. Because these RMR experiments are a whole different way of going about cracking aging in mice. And there is absolutely no reason why we should not be able to go way beyond 4 months. As I say, the definition I've given to this goal, robust mouse rejuvenation, is 12 months. But even if we got 8 months, we would be in another world. And all my friends and colleagues in the biology of aging, they know this. So that means that such a result will essentially give them each other's permission to say much more aggressive things about what's going to happen in the future. Many of you will have heard of a program called AlphaFold, which was developed a few years ago by a brilliant company named DeepMind. What it does is you give it the amino acid sequence of a protein and it figures out the three-dimensional shape of that protein. That turns out to be an extremely hard thing to determine experimentally in the test tube, though it can be done in most cases, but it can now be done in no time at all in silico, just because they figured out how to do it. Now, this is something that people have been trying to figure out for decades and decades, and they've made basically no progress at all. It was just the same as with lifespan in mice. And then suddenly they figured out what to do, and bang, it was all over. You know, I mean, there's still improvements being made, but for practical purposes, it was all over. So I say I know these people. I have been working with my colleagues in the community for some time to try to get them to say things that are as aggressive, as optimistic as they're willing to say. And this is what happened 2 years ago, year and a half ago. We were able to put out this thing called the Dublin Longevity Declaration. That was produced, it was announced in Dublin at one of my conferences. And, you know, it says some fairly aggressive things. And as you can see, it is signed by lots of top luminaries in the world of the biology of aging. But it didn't have anything about firm predictions of timeframes, even probabilistic predictions, which are the kinds that I always give, of course. So I wanted to get this to explode. I wanted through 2024 to get the public generally on board. And I said I wanted to get from 2,000 members of the general public, which is what we had around the end of 2023, to 200,000. And in fact, we've got about 2,500. It didn't happen because there's no time frames here. Once these same people, this same majority of the luminaries in the field, become willing to say things that really mean that we are close to bringing aging under medical control in humans, then we'll get our 200,000 signatures and a hell of a lot more than that. So for now, I just have to plug away and get what money I can to achieve that goal of RMR. The first experiment, RMR1, the one that has 4 mice left at this point, cost about $3.5 million. You know, maybe there's another $1 million that needs to be spent to analyze those tissues that we've stored. As I mentioned, at Sense Research Foundation, I actually started the kind of precursor to this experiment. I'm calling it RMR beta. It was just 2 interventions, stem cells and a senolytic. And it was worth trying, but I definitely would have started RMR1 in late 2021, actually, not early, but sorry, late 2021, not, I guess I got the years wrong there. I meant early 2022, not 2023, which is when it actually started. You know, so that's a year lost just because of the theft that you all know about. Furthermore, as you know, you guys donated $27.5 million. RMR1 cost $3.5 million. You know, even if I'd done it without any kind of cutting of corners for budgetary reasons, it would have cost maybe $5 or $6 million. So I could have done 5 of those experiments. I wouldn't have done them all at the same time, but I would have done at least another couple of them starting in 2023 or 2024, not in 2025, which is the earliest it could possibly be now. So basically, we're talking about at least 2 years of delay that has been caused by the theft in the achievement of the thing that I am sure will trigger the complete change in public attitudes to aging and will trigger a war on aging. Now, of course, as time goes on, after that, you know, in the subsequent decade or so that people are trying to fix aging in humans, we will somehow catch up a bit. Maybe we'll catch up most of it. But I can't find any way to argue that we won't, in the end, once we get to longevity escape velocity, that we will not have lost at least 4 months. Now, you can do the numbers. 110,000 people die every day from aging worldwide. So that means that it only takes 2 months to lose an entire holocaust of people. Think about that. And it would have been more. We would have lost more than this if it had not been for the courage of the 3 plaintiffs who donated large amounts during the airdrop in July 2021 and who sued Science Research Foundation and were able to secure a settlement that extracted enough money for me to run RMR1. The people who stole this money and who are still holding on to most of it, except that they've spent most of it by now, they've squandered most of it, they still haven't seen justice. I'll stop there and just mention that you can always email me. My email address is there in green. I want to thank all of our donors, of course, including everyone who's listening, and our collaborators and advisors. ICOR is the company where the work was done. We wrote, for those of you who are deep into the biology and want to know more about the weeds, we wrote a paper describing everything and the motivation and rationale, which came out earlier, about a year ago now. And the QR code on the right is to our donate page, where you can donate every kind of fiat currency and also any cryptocurrency that is traded at Coinbase or Circle or Uniswap. If you have something in your back pocket that is not traded at those places, please do not send it through the donate page that you see on the right, because we won't be able to get hold of it. And that would be a very bad thing. In fact, somebody already did that with a substantial amount of money, and we're trying to see what we can do about that. However, we have now created, or rather, I must say Matty has created, a Trezor address, which you can see there. And so for anything that's not traded at Coinbase, Circle, or Uniswap, please use the address that you can see there. I think Matty mentioned he's going to put it in the notes as well, so you don't necessarily just have to take a screenshot and then type it out, but please do if you want. So I will just say, this is our website, but I'll put this back in case anyone needs a little more time, and I'll be happy to answer questions for the next few minutes. Thank you very much.
Awesome. Excellent talk. And I definitely saw one question that had come in already. There were a number of positive comments from supporters here. We had RH Max, Aubrey is the hero, Hod Pearl, incredible research, Crypto Class, welcome Dr. DeGray, interested to hear your talk. And so those are all Hexa YouTubers who are very helpful in getting the word out about longevity. Here we've got a question from Brendan. Aubrey, I love your goal and your presentation. If you could get the funding, could you add more top minds in the field to assist with your research?
So the answer is yes, absolutely. To some extent, I'm already adding those top minds. Obviously, as I mentioned, I am good friends with everyone in the field. So a lot of the top minds, talk to me all the time, advise me, help me. We discuss these things. However, for sure, with additional funding, one thing I could do would be to arrange these collaborations I mentioned to analyze these tissues that we have stored and that we don't have the money to analyze right now. That's just one example of what would happen.
Awesome. And we have Crypto Class here. She's I know she has her MD in Australia. She's asking, how have you made your intervention specific to target the particular aspects of metabolism?
So we've actually tried to avoid doing that. And here's why. When I described the divide and conquer strategy, these 7 different categories of damage and the various approaches to fixing them, that describes the direct impact of each of these things, the various types of damage that will be directly repaired. But the thing is, everything's talking to everything else all the time, which means that if you repair one type of damage, you're quite likely to slow down the accumulation of other types. You might even reverse other types by essentially releasing the brakes on some of the automatic built-in repair machinery that the body already naturally has. So we expect quite a lot of these indirect knock-on effects. And indeed, in RMR1, we kind of sort those out, because what we did was we chose as our main criterion for whether we would include something as a component of the experiment that on its own, it will give an actual meaningful increase in longevity. Not anywhere near as much as 4 months, but still some. Now, in order to do that, it has to have a lot of knock-on effects, right? Because it's got to at least slow down a little bit pretty much everything that kills mice. So we're looking for those indirect effects as well. So certainly what we do is we are choosing interventions which on the surface are very different from each other, but we are not making any assumptions about whether there will be this or that indirect knock-on effect. And in fact, we're also, of course, as I mentioned, looking out for the possibility that there could be antagonistic knock-on effects, that things could actually cancel each other out.
Awesome. Great. Well, those were great questions that we had following the great talk. And so, yeah, really appreciate everybody's support here and how everybody has donated in the past and hopefully will continue to donate going forward. I want to thank Aubrey for being a supporter of Hex and Pulse Chain and always showing up to these things. I appreciate it.
Well, thank you very, very much, Matty. You've been an absolute hero here, and so have everyone who's donated, and anyone who can donate more in the future. You'll be saving a lot of lives. I worked out recently that every dollar that is received in this work saves at least 1 or 2 lives in the long run by bringing forward the defeat of aging by at least a few seconds.
I love that. That's a great statistic. So we'll wrap up on that note, and thank you, Aubrey, again for being on, and looking forward to having you back again in the future.
Absolutely. Enjoy the rest of the conference, everybody. Bye for now.
Thanks. All right. Well, we've had another super successful day of hexconference.com, the 5th annual. Here we are on day 3 of 4. So we have one more night to go tomorrow night. First of all, I want to thank all of our speakers. I want to thank the sponsors, Fiat.io, TexitCoin.org, and Actuator.finance. And of course, we've highlighted on screen today that you can donate to levf.org/donate for today's spot. And basically, we've shared information about how to donate the coins that are on Pulse Chain, any tokens, anything like that. And I'll drop that in the live stream again just now. We've got an awesome schedule for you tomorrow, and that'll be something to look forward to. Starting off with nuclear herbs, going over any legal, stuff to go over. Basically, anything that comes out new tomorrow. Hopefully, fingers crossed, we get a dismissal of Hex from the SEC case. But even though we don't know when that's going to occur, we're ready for that. Otherwise, we'll be discussing other important stuff, and I'm sure there will be some good stuff reported there. And let's see. Then we'll have a number of extremely strong speakers tomorrow. I also want to thank all of you who are tuning in and watching, hitting the like button, share, leaving a comment after the fact. This helps create this social proof that allows more people to learn about and understand Hex. And that's what it's all about, is having this great system where people can trade like with Bitcoin, but people can also time lock. Also like with Bitcoin, except you get to get paid the inflation. in this case. So, and thanks to everybody who's been streaming it on their own channels. I know that my StreamYard is telling me we've had like 2,900 people tune in today live. And I think that's been across a lot of different channels. So yeah, thanks to everybody today. And let's see. We're going to go ahead and play some outro music, and then we'll be back tomorrow at the same time. Until next time, stake wisely, my friends, and peace out.
She told me I did a hex on her. If she don't got hex, then it's next on her. Too many bullies I had, I gotta flex on them. If they wanna see the proof, I got a dex on them. Young Hexican trying to shift the paradigm. I was in the trenches trying to get close to the paradise. Worry about your own bag, I'm fully aware of mine. Certified and verified, I'm yachting on the ocean and my phone is using maritime. No filet mignon, but I stake money. Liquidity provided, I feel like I'm Poseidon. Loudest when you're losing, when you're winning, they be quiet. These are just the thoughts that I be thinking when I'm driving. Dreams of flying private, I've been high vibing. High school parties, why wasn't I invited? Now I got two biddies asking me when I'm arriving. E-hex, P-hex, money multiplying. Haters fabricate, but dog, the numbers isn't lying. I must have ate a Mario shroom, I'm feeling giant. Should've never gave me no rules, I feel defiant. I feel the...